Hey, hey, I'm in here. All right, guys, let me unmute this real quick for everybody. Thank y'all for stepping in. It's here. Share the screen and then I'll unmute. Okay, guys. Hey, everybody. Thanks for coming in. I see Ben Huff. What's up, Ben? Jamil, Jessica, Omar, Michael, Mara, Terilyn, Sharon, and we'll just let everybody kind of trickle in. So if you guys want to use the chat, tell me where you're from or use the mic, whichever you choose. Just then we'll get going once everybody kind of bumps in. And everybody's muted upon entry. Hey, team, what's going on, Jamil? From LA or Louisiana? Which one? Which one? Oh, okay, all right. Young Nip Hustle. All right. Let's see here. Curio. All right, San Diego. We have Tennessee. Sharon. All right, guys. I'm in Texas. I'm in North Texas. So let me know if you can hear me clearly. I want to make sure you guys hear me perfectly clear today. What's up, Miami? All right. ATL for Janice. Wisconsin. I've been up there. Okay, perfect. Lorenzo Merriweather. That's always a great last name. We got El African Trader, Diana Oliveira. Everybody's chiming in. Good, good. Well, let's give it a few minutes. What's going on, Mac? What's going on, guys? We'll get going and just see what. Let's give it a couple of minutes, probably about 3:02. 4:02 Central, 4:03, give or take, and then we'll get rolling. Just come the I guess the agenda today or the plan is going to be just an introduction to just how to the investing side of things and trying to make it easier for the average person, just the human being that's an America in the world to just step in and buy that share of stock. And also we're going to talk about this market, how unbelievably volatile the market is. So we'll do that. But yeah, everybody, let's use we'll use the text box to kind of let me know where you're from and if you have any thoughts or ideas. But I get a little long-winded. I just think this is an important period. I want to record this also for those who aren't able to make it. Let's see here. Okay, we got the recording going good. Oh, that's Thinkorswim, Mike. It's a Thinkorswim on the from TD Ameritrade. Matter of fact, let me go to TD right now. And that's this TD Ameritrade, but their trading platform is Thinkorswim, and they have the thing about it is I'm trying to get everybody to kind of think about Thinkorswim or TD Ameritrade because there's no account minimum. You don't have to start with 500 or 1,000. You can open the account tonight and not even fund it right away, and you get access to their trading platform, and then you get access to their virtual trader. to where you can, I don't use it as much anymore, but you can switch and you get virtual money to test yourself out. But that's a step that I don't want to go to yet. I want to go to the investing side of things first to build a foundation. So, and for those of you who just entered right now, everything's on mute, uh, folks. But when I talk, I'll go ahead and mute it back. But I just want to tell y'all, I exited out of Robert. We're going to give everybody a few more minutes to get in here. If you're just getting in, hey, what's going on, Steph? King Steph, let me. We got the raw trader. That's what I call King Steph from LA. You have some people from LA in here. See if I can pull it up. Brother Steph, appreciate you coming in, man.
For sure, for sure. You know I wouldn't miss it, man.
All right. Well, look, I'm gonna let everybody kind of chime in and kind of for the next couple of minutes. I don't want anybody to miss anything. Then I'm just gonna get started. So I'm gonna mute everybody back, and then I'll release you when it's time, kind of for you to step in and dive into some things too.
For sure.
Okay. I'll get on that, man. Again, I appreciate it, man. Okay, if everyone can hear me, we have 35 in here. Give me 1 second. I just want to go ahead and, you hadn't said where you're from. We have South Dakota in here. I scouted up there, man. Virginia, used to live in Virginia, lived in Richmond. Not a fan of Richmond as much as I like Tidewater. Pennsylvania, Celeste, okay. Carolina, Kakalaki. Okay, we got Nashville. We got NYC up here. Okay, good. Let's let it get up to we're at 34, 35. All right, I'm gonna go ahead and get it started. And please utilize the chat box. And first, tell me, let me see one thing. Hey, Steph, can you see the participants log up on the screen right now, or the chat box?
Yeah, I can see it.
Okay. I just making sure. All right. Well, let me. I'm gonna go ahead and mute everybody, and then we'll get going. All right, everyone. Thank you for coming in today. They're still coming in. Let's. I'm just gonna go ahead and get started, and we can follow up. But I'm recording this so we can have just a good log of what's going on. I have some stuff written down, but I just want to introduce myself. My name is JD Ellaby. I've been an investor since the age of 16 years old. I just love it. I love the market. I love the stock market. I love investing, and I think I've always told my my family and friends that the online, I guess the online trading account is our weapon against discrimination, against racism, against classism, and things like that. Because right now, when you sign up for an online account, you're an account number. They don't ask you your race. They don't ask you your religion. They don't ask you your educational background. If they do, they don't have to. They can't verify it. It's none of their business. The idea is, how are you funding this account with zeros, commas, binary numbers? So that that's the step that we're taking to kind of move past, I guess, a society that is kind of there's been the have-nots and the haves, and it's the playing fields can be leveled. Now, what I'm trying to provide is education today. So the first thing I'm going to talk about, guys, is it's key right now. Okay, the market's going down. It's tanking. It's going down. It's going. There's a big concern. Everybody's worried. But the chart that I have up right now, I have up. Let's see what I have. It's the 20-year monthly chart of the Dow Jones Industrial Average. So that's the average of the top 30 stocks, Dow 30, over the last 20 years. Well, for the easily last 10 years, we've been in a bull market. And that's a homework. Okay, guys, listen up. Homework assignment right there for vocabulary. I want you to build up your vocabulary in this particular field. The first one is we'll go with bull market and bear market, and I'm gonna kind of move with you as I kind of give you terms. And so we'll type in right here. Go to investopedia.com. That's a perfect website for when you're first starting out to learn, to get a lot of information. It needs to be a saved tab. So let's type in bull market. Bull market definition. It comes up in the search results. We'll go a little lower down to the search results. Bull market definition. And guys, just bear with me because I'm going to teach a little bit because I really think it's imperative, and it might get boring, but that's why the minutia and the boring aspects of it initially can become something about, because we can pull money out of this market, even out of this bear market we're in. But the definition we're looking for a bull market is a bull market is a condition of a financial market in which prices are rising or are expected to rise. The term bull market is most often used or used to refer to the stock market, but can be applied to anything that is traded, such as bonds, real estate, currencies, and commodities. A lot of times my friends and I or anybody say, I'm bullish on toilet paper right now because everybody wants some toilet paper, or I'm bearish on Boeing. I hate to say it. Now, think about bull up, the U for up. That's a bull market. It's going up. You see the bull right there? It's in front of the New York Stock Exchange, or it's down the street from it. Then you type in on Investopedia, bear market. I want to build up your database, your terminology database, because it's going to be key for us to catch signal. And the word signal, I'm not talking about signals. I'm talking about the singular word signal. It's basically to catch somebody. They'll make a statement like the Dow was down 70 handles today. JP Morgan has put a sell rating on NVIDIA. Blah blah blah. Yada yada yada. They're talking about some other things coming up. Someone tests positive, but the signal in there was that an investment firm put a sell rating on a key stock, and you need to watch. So we're going to learn these terms to where when you're watching the news channels or you're seeing a particular, you're looking at a news publication, a financial publication, you see those words, they're trigger words. So bear market, I'll read the beginning. Witnessing a bear market for stocks doesn't have to be about suffering and loss. Even though some cash losses may be unavoidable, instead, investors should always try to see what is presented to them as an opportunity. Okay, that's key, guys, because this comes around, this type of market comes around probably once every 10 to 12 years. Last time we had it, they made a movie about it, The Big Short. That was a financial crisis, the mortgage collapse. So, and I'll get into that a little bit more, but let's read the definition. Bear market, the most widely accepted definition, says that anytime broad stock market indices fall more than 20% from a previous high, a bear market is in effect. And we're well off those highs. We're off 32, probably a little bit more than that. I mean, it's I say 32, but give or take. But we're in a bear market right now, guys. Most economists will tell you that bear markets simply need to occur from time to time to keep everyone honest, which is true. It shakes out the bad actors. It shakes out. It's kind of bear markets are stabilizers. You have to have pullbacks and to get a chance to go up. But write this down. The next term I want you to write down, everyone, is correction. Basically, as in a market correction, right here. investing, a correction is a decline 10% or more in the price of a security from its most recent peak. Corrections can happen to individual assets, like an individual stock or bond, or to an index, which is the Dow is an index. The Nasdaq is an index. A basket of stocks, primarily technology stocks. It's basically a measuring group of set of assets. Corrections have to happen when things become overpriced. And I'm sure all of us are familiar with Bitcoin, which I'm a fan of crypto. I'm a fan of Bitcoin, but you could tell Bitcoin was set for a correction when you would hear someone at the fellowship hall after church talking about, I'm talking about a 75-year-old deacon who still had a flip phone. You know what? I'm going to get into that Bitcoin, that kind of thing. It's like, it's time to sell. When everybody, the euphoria, we'll talk about that for a second, but I want to talk to you about a market cycle. I'm giving all these to you in the beginning so we can kind of have a foundation. Hopefully you're writing it down as much as you can or recording the screen. Definition of a market cycle. All right. What are market cycles? They're also known as stock market cycles. It's a wide term for trends or patterns that emerge during different markets or business environments. During a cycle, some securities are assets. Excuse me, one second. Some securities are assets. Asset classes outperform others because their business models aligned with conditions for growth. Market cycles are the period between the two latest highs or lows of a common benchmark, such as the S&P 500. That's the 500 highest market cap stocks within our U.S. stock market. Okay, guys, a market cycle often has four distinct phases. You can have that accumulation phase. You can let's find it for real quick. Let me find the market cycles for you, but here it is, because we're in the distribution phase right now. Accumulation phase occurs after the market has bottomed. Now, this is important. And for everyone has a 401k, a Roth IRA that we're struggling with right now because you've probably taken a serious hit to the value. You haven't lost money yet. You've taken a hit to the value of your asset, of the 401k itself. Let's see. Now, with that being said, you haven't lost money until you sell. Now that's hard to say as if, it's like, look, man, you hadn't looked at the red on my particular 401k, but the market cycle's going, the four distinct phases. And so accumulation occurs after the market has bottomed. And I'll show you what some of that looks like. The innovators and the early adopters begin to buy, figuring the worst is over. Now, the markup phase, this occurs when the market has been stable for a while and it moves prices higher. We can see all this on the chart. I will show you. Now, the distribution phase, this is after we've run up. Sellers begin to dominate as the market reaches its peak. Downtrend occurs when the stock price is tumbling. It can be at the single stock, or it can be within the market cycle of the entire index, or the entire, just the industry right now. So we're dealing with a a viral contagion right now that has trickled over into the financial markets. But let's go back to we have enough, kind of have enough. I've done enough with the definitions, but the market was set up right here. Look, okay, look on my screen. Let me make sure I have everybody up there. I can minimize that. Okay, we're up on the top of the screen right here. The date of this that was like January of 2018. We go down to the bottom here. This little area is volume on my screen. Down here is the RSI. This is the relative strength index. I'm kind of getting ahead of a few things, but I just want to kind of give you a little idea of how I analyze where a trend is going and a potential for a sell-off or a potential for something's prime for a correction. When the RSI, the relative strength index, that particular line is traveling right there. It'll trend in certain ways. It'll trend down. That'll be a bearish run. It'll trend up. And a lot of times it tends to correlate with the price action on your chart. Now, when it goes above the level of 70, it says it is overbought. That means it's a little bit extended. It means price is past somewhat of fair value, where individuals are like, okay, it's kind of pricey. I'm not buying it. I'd like to let that price come down. Now, when it gets up even further, it might get into the 90s sometimes, because you can stay overbought for extended periods of time. People will take profit. And when people take profit, a lot of times you might have people who have had a run for 10 years now, a bull run, where you could put money in a particular stock. Now, this is where we're going to come back, guys, to what I'm talking about with what we're in right now, because we're looking at 2007, like on my chart right here, where my cursor is, and that's when the financial crisis went into effect. And we had 2008, October 2008, December 08, and the bottom occurred in February of 09. You know, the base was the low was 7,033 on the Dow Jones Industrial Average. Boom. You can't time that market. Is there sound? Can you guys hear me, please? Richard King can't hear me. Chime in if you can hear me. Okay, there's sound. Okay, Richard, probably try to replug. Okay, thank you very much. Okay, guys, we're going back into this, and we look in closer. We talked about distribution on the market cycles. This is where distribution, when everyone's selling, taking profit, and then there's a panic sale at longer candles. These are, guys, I also want you to look up I'm gonna go back and forth now on the education side of things. This is, because I'm a technical trader, but I'm also a fundamental and a news guy. So look up candlestick patterns or just candlesticks sometimes. But let me go down here and just, there we go. We'll go using a candlestick chart. Go ahead and research that. There's a lot of the patterns you're going to see that candlestick charts are what are used when a lot of individuals are charting price. Candlestick is a type of price chart used that displays the high, low, open, and close prices of a security for a specific period. So now think about that specific period. Each candle represents a period, and you can change the period on your chart. So right here, each one of these candlesticks represents 1 month within this 20-year window that I've put up on the screen. Okay, so we're in 09. If you look at the top right up here, it'll tell you the date, 808. So my cursor comes down, October of 2008. Boom, we get down here. We have a bottom, but you don't know you're at a bottom. You do not know you're at the bottom because the volume was, well, the volume was still fairly solid. There was a big sell-off right here. And I track volume also, guys. You want to track the trend, the ups and downs of volume, and we'll walk through that a little bit later. Okay, so you don't know you're at the bottom and you don't have to time it. But if you're looking, as if you're an investor, you're a young investor, you're looking to get in the market, and you start right here. And okay, it's sold off a little bit, no big deal. Boom, it's sold off. It's 1 month, it's sold off. Two months in a row, it's sold off. Okay, that's three consecutive months sold off. 4 consecutive months sold off. And I'm gonna throw something else on the screen real quick. Let me put up, it's called a simple moving average, guys. And I use these, and they're very important when you're charting it, because not only is, some people say, oh man, that candlestick stuff doesn't work. Well, it doesn't have to work from the standpoint of like how you're thinking. The idea of the candlestick pattern that we're looking at is that if one person is using it, if like the key money making figures use these moving averages to establish whether they're going to buy, sell, or hold, it's imperative. It's just prudent that we actually learn how to understand these particular understand what they're doing. You don't have to use it, but when you hear someone say, "Oh, it crossed the 50-day moving average," or "It crossed the 50-period moving average," you'll understand that, oh man, that's kind of, that means something. That is that bad or is that good? So what we're going to do is you're going to learn how to basically, when you hear it, you'll know, okay, hey, that was a death cross or that was a golden cross. And if you write that down, that'll be something good for you as well. But okay, this orange line, this is the 50-period moving average. 3, 4, 5 months of sell-offs, kind of I'll remove this right here. Let me remove these guys. Those are my lower intraday charts, or moving averages. But if you hear someone say, oh, it's crossed that particular threshold, it is absolutely imperative that you pay attention to it. So the big sell-off, one of the bigger sell-offs came on June 1st of 2008. If I have, and I have my book from that date, from those dates. Let's see, where is everybody? Where's my, find that, June 5th, 2008, June 1st, excuse me. Let me see if I can find that, what happened on that day, because that was a big sell-off. And I write down daily what I was doing, and I had just started on May 30th. This was 1 month of live trading for me in the stock market, from the standpoint, not investing, but trading options. So I was walking into one of the most historic bear markets that we could ever see. And I was oblivious to the fact that, hey, this is what's going on. So let's go to June 5th, 2008, if they have it in there. Should be right. It's in that month. Okay, well, this is, within this month right here was when I hopped into Lehman Brothers. I hopped into, there's a ticker symbol TRA, NBR, and I can't tell, guys, what video is. Anyway, I don't know if you can see it. I was average $1,440 that morning, $1,540. And the idea was, I went to an investment meeting and the gentleman was like, hey man, I know you're trying to trade options and you're looking at, you buy and hold stocks, you have a 401k and things like that, but it's time for you to look at how to short stocks or how to, um, or he said, look at puts. I was like, really? Why? What's going on? And he was like, there's something about to occur in the market. I was like, wow, how do you know this? And he was looking at the RSI right over here. If we go back, we saw the run up. And when it's running up, guys, you feel really good about the run up. It's called irrational exuberance. Nothing bad can happen. The more money you throw at the market, it throws it back to you. It's like, great job, boom, more value, more value. And a lot of times you have to lock in profits. And there's certain trends on a chart that you see that are precursors to a fall. And then all you need, if it's set up on the chart for a fall, you need a catalyst. The news catalyst that happened was the mortgage-backed securities. Too many defaults. Anyway, the sell-off, it occurred. It fell below the 50 period moving average. And when that happened, the momentum picked up. And when I say momentum, it's like the volume is there already, but it's red candle, heavy red candle, red candle hits the 200, more red. And this was from right here, that period is 1 month, 2, 3, 4, 5, 6, 7, 8, 9 months of pain. And then if you go back even further, you go 10, 11, 12, full year, 13, 14, 15, 16 months of devastation and pain. And people steadily call for, it's going to bounce back right here. And it did. It hit the base and ran back up a little bit. And people get excited. And the fact that it ran up, people set it up and they sell. Boom. It'll run up a little bit. You have some exuberance because we're looking for any glimmer of hope. Sell off. And now this one is where the sell off, the big candle came in and it sold off and the trickle down effect. And I always show this one right here, guys, if you can see where you think, why are you studying candlesticks? Why are you studying candlesticks? Well, if I know what the mass or what the money makers or the mover and shakers are studying and where they're going, it won't be to the point of like, we're late to the party. But listen to Seth the Entertainer. Tell me if you can hear him, because Celeste, can you give me a thumbs up if you can hear that? Okay. Well, that was a Seth the Entertainer video of where if 2 or 3 people start running at a concert or anywhere, he's like, we don't stick around. We look and we follow. We go. We got to get out. And that's basically what happens with that, with the pain that comes in. And you know for a fact that people will buy, but also people will start selling at certain points. So I'm going to dive into this a little bit further, guys. My biggest mistake was I learned to short. I did a great job. I shorted, I bought puts. And once that happened, I forgot, I overlooked the fact that a bunch of the, you have to use a blue. I got you. Okay. Couldn't hear say it, but you saw him running. Good. But y'all can still hear me. That's the key with that one. Just verify that for me right now real quick that you can still hear me going. Okay, good. But the key was I did not purchase stocks that were at historic lows at that point in time. A lot of people were buying at this point at these different stages, which if you have you have to set up your plan, guys. Young investors, you can't just come into the market and think, okay, I got the stimulus check, $1,200. Let me throw it at, let's see. Let me throw a 1,200 at Apple's down. Oh, no, let's see. No, let's go Activision. Activision is at $52. Let me get about 10 shares of that, and let me go something else cheap. And you start looking at the cheap stocks just because they're cheap, but you have to still look for quality assets, blue chips, if you're going to step in. But there's a caveat to investing in a down and a heavily bearish market. It could still go lower. So let's say you get into not Netflix. Let's find McDonald's. You want the McDLT, or let's go to Marriott. Okay, $74. You get in there, or somebody says, "Hey, I'm gonna invest in Macy's." Macy's is at all-time lows. Get that. I'm gonna get in that stock. Look at this trend on Macy's. Boom, boom, boom. It's now we're on the 20-year chart. Macy's is good. That price action is coming back below the last 11-year lows, and it's fine. So hey, it might find support. If you do buy, you have to establish your trading plan or your investment strategy, which should be long term, because the long term idea is that this thing may go down another leg down, and it might get down to $3, and you put that $1,000 in there, and it cuts it into $500 in value, and then you sell, and you're out, and you're frustrated like the market sucks. This isn't how it should work, but realize that we go back to the fact that we're in a market, those market cycles. We're in that distribution phase where people are selling, people are cashing out, people are panicking, people are running. Now, the thing is, there's a time for that accumulation phase. You don't know when it is, but you will see signs of an accumulation when, now I'm kind of getting ahead with the charts, but the idea is, guys, is when you buy. Now look at Activision. When you buy, let's say I bought up here. I got excited. Activision's been paying me, man. It's paying me. All these levels just running up. That's really accumulation right there too. But running up, we're in a bull channel. I buy right. Let's say you bought at the top of this channel at $83. Hey man, I bought Activision, Mom. I bought Activision, Dad. Whatever. And oh, good. And you don't have your investment strategy as a long-term strategy. You just want to look at it every day. That next month, Activision sells off, and before you know it, you bought it at 83. The low of that month was $63. You lost $20 per share on there, and it just looks bad in your particular investment account. The very next month is like, hey, you hold, say maybe it'll come back. You lose another. It goes down to what's the low? 46. So you've lost almost 50% of your investment, but not the money. You've lost the value. So you'll sell. Now, you know who you're selling to at that stage? You're selling to smart money. There's somebody waiting right at that 50-day. Let me put it on the one I like now. We'll go on the daily chart, guys, and we go 3 years, 1 day. If I can find it, we'll just go 1 year, 1 day. Before you sell during a period like this, guys, you don't sell during pain. Now, if your time horizon is to the point of like where you need that money, where it's absolutely imperative that you need the money, okay, I understand that. But if you don't need the money, it's go ahead. If you can hold through that pain and you have that 5 year, 3, 5, 7, 10, 12, 15, and for you younger individuals who are looking to invest, 25, 30, 40-year window. If you're 20 years old and you have a 30-year window, Activision, not just Activision, but the market historically is coming back. Now, if you buy at these levels as it's going down, you have to buy with the understanding that I may endure more pain. Can I endure more pain? Now, if you don't buy right here and you save your money, you can find a time, during that time you study, you invest, study, you increase your understanding of the market cycles. But look right here. We had the sell-off, had the straight, just an unreal sell-off, boom, boom. And then instead of going straight down, our trends begins to go sideways because we broke through the 50-day moving average right here, which is that orange line that I mentioned. The blue line is the 200 period or 200-day moving average, since it's the weekly, but we'll play like this is a daily right now. broke through this one as well, but it found a little support. And I'm gonna remove these lines right here. These are support and resistance lines, guys, and they're very important because support and resistance occurs when there's basically an agreement between the bulls and the bears, between a buyer and a seller. When I come up with the idea of like someone wants to sell at this price and I'm willing to purchase at the other price, we have an agreement. Well, price action kind of began to stabilize. Instead of going straight down, we have a trend basically into a trading range right in this area. But it builds a base, kind of a roundish base. Sometimes it'll be even flatter than that. But what you're looking for is the breakout. That now right in here, a lot of times this is share accumulation. People are buying this at different prices because it's kind of stabilized. The bleeding stopped. Now we're not looking at the parabolic run up that you want, but if price stabilizes, a lot of people can do something that I call dollar cost averaging. And that is very important for new investors. This is the phrase right here, dollar cost average. Important. So let's say you decide to earmark a certain amount of funds for investing. You're going to say each month I'm going to put $50 aside. And I'm going to dollar cost average that what we learned in this meeting today. And it says, what is dollar cost averaging, or DCA? Averaging is an investment strategy in which an investor divides up the total amount to be invested across periodic purchases of a target asset in an effort to reduce the impact of volatility on the overall purchase. So guys, write that down. I want you to look a little bit further into it, but basically is if okay, let's say you're going to go $60 every month and Activision's at 52. This month, you put it into your brokerage account. You say, okay, it's time to buy. I have enough money for one share because I'm putting $50 into it. You go through your situation, you click confirm, you send it, and you have the order to buy Activision. Now, let me go in there and cancel this order now. So I can, we'll go back to what we were talking about. But that month is at $52. Let's say next month you hop in, Activision closes at $43. Okay, I can buy another share. But there's a point where, let's say if Activision dropped to $22, you still put the $60 in there and you can buy 2 shares. Or if you $60, if it drops to 20, you get your 3 shares, So you keep the same amount of investment capital earmarked for that particular strategy. And now, if the price goes up, you buy less amount of shares. A lot of times, one of the things that you can focus on, guys, is an index fund. This is the S&P. The S&P. This is the SPY. It's the index fund that mimics or mirrors the S&P 500. The 500 highest market cap stocks in, basically in the industry. So that's at $228. If we go back that 20-year window, let's see if I can, bear with me, guys. Let's go 20, and we'll go weekly. S&P was down to $50 in that range in 2009. So let's say you were the low, what's the low, 75? Never got to 50, but let's say you were putting $100 aside, and you just every 2 weeks or every month you were putting $100 in there, and you were getting your shares of stock at $75. A couple of times you maybe went up to $250, and you steadily stayed with that program. Even over here, when the market was up, before we ran into the the mortgage crisis. Your $200 that you were putting aside, it would begin to buy you more shares of this stock. And if you have your long-term vision, because we're not looking at pulling this money out next week or 3 weeks or a month or 6 months, because with the historic correction or a black swan event, when a black swan event occurs, black swan events are rare, but people are always kind of prepared. Well, it's always in the back of your mind. Is this the next black swan? Is Brexit a black swan? Well, it just happened to be that a viral contagion is a black swan for us right now. Black swan is an unpredictable event that is beyond what is normally expected of a situation that has potentially severe consequences. All the characteristics right now. Black swan events are characterized by their extreme rarity, their severe impact, and the widespread insistence. They were obvious in hindsight. Yeah, a black swan is an extremely rare event that has severe consequences. Uh, though many claim it should be predictable after the fact. Yeah, after the fact, okay. But there's also people that always claim the sky is falling. If you look at CNBC recently, I think it was Bill Ackman. Um, he was on CNBC. He's a hedge fund manager. And most recently, well, he is a crier, man. He cried before. So anyway, I was thinking he just cried the other day, but he said he's in cash. Uh, this is a historic event. Really, but then he also said he's buying. You have to separate the noise and find the signal. Ackman said he got out of he was, he shorts things. He shorts a lot of things, but also he goes long and said he was in cash. Um, and then he was crying. So the idea that you find out that this gentleman is crying, the sky is falling, but he's still buying, that is a telltale sign that, okay, well, he knows that the market's going to come back. But now listen, the timing, you can't time it. We don't know when this market's going to return. We don't know how far this right here looks like Thor's hammer going straight down. And if you look even closer, I look at volume, guys. Okay, look at volumes down here. That's the number of volume, right? Like 618,987,000, blah, blah, blah. Okay, we're sliding it across 300, blah, blah, blah. Then we have that on, got 1 trillion in volume on the date of February 5th, 2018. That week, the week of February 5th. So 1 trillion in volume out of the blue, just a spike out of the blue. It went down and touched the 50. And we broke through. We had another set of 1 trillion in volume. So these are things that you're not thinking about until it happens. Then we go further down. We're going, okay, now listen, guys, this is important. When the market goes up, everybody gets excited. But if you see the market rising on declining volume, money's leaving. Money is getting the hell out of that. That's not like a market going up with happiness, excitement. It's like people shorted here and they're getting out of their short plays. They're selling, you have to buy back when you short. So let me just pull that up. I'm sorry for going to the definitions every time, but I just want to give everybody a good basic understanding. Let me find the definition. Short definition. What is a short position? A short position, a short position or a short or short position is created when a trader sells a security first with the intention of repurchasing it or covering it later at a lower price. A trader may decide to short a security when she believes that the price of the security is likely to decrease in the near future. Now, that shorting is almost, it's a cousin of buying a put for options for you options enthusiasts or aficionados. a put and a short are the same. We want the same thing out of that. We're looking for a price decrease or decline. When you go long a stock, you want a long position. These are important definitions, guys. I'm sorry if I'm boring you, but it's key. What is a long position? Also known as simply long. It's the buying of a stock. It's just the basic buying of a stock, commodity, or currency with the expectation that it will rise in value. Holding a long position is a bullish view. Remember, we talked about bullish, bearish, bull market, bear market. Okay. Going long, you can say I'm going long. I'm bullish on toilet paper. I'm long Charmin. I'm long Scott toilet paper. You know, those kind of things. You can make a joke like that. And now a put and a short position are synonymous. Well, for a long position, the cousin to that on the option side is a call option. We'll get into that later, but I'm just kind of letting you see that. Okay, let's go back to this. We're buying, it's increased, price is increasing on declining volume, which is big. Money's leaving the market from the standpoint of like it's just not a lot of activity. We were at $1 trillion a few days before that, or a couple of weeks before that. So as we move along, each one of these candlesticks is a week. As we move further, we get down here. Now we're in Tenderona. It starts popping up. You know, not Bobby Brown's, but the contagion. We see a little run up, and volume is really low. It's like not a lot of participants, not a lot of activity in the market. Then all of a sudden, this had to be something. I guarantee you, when our president spoke, the fear hits the market, and when fear hits the market, you can see. We can see what it looks like for human psychology is right on this particular chart, and the dates will be right in our face. So this particular week, the volume, a light sell-off at 294 million, and that was the week of February 17th, 2020. The next week we go February 24th, we're back up over $1 trillion. And then it's staying at over $1 trillion. And I bet it's maybe 2 trillion right here. Well, 1.5 trillion, this is volume. And it's never had this type of volume. So people that keep saying that we're going to bounce back, and we've reached the bottom, you can't call a bottom. Now, I'm not saying get in there and sell your 401k, cash out. I'm not saying that. What I'm saying is that if you do want to enter into the market, you enter in with the idea that this market is possibly quite theoretically not done selling off. But now the other caveat is that the stimulus package that could come into play, and the next thing you know, you could see a V reversal within a week, because that was a sell-off. But again, the volume was down. We had to watch volume. Look at the RSI though, guys. Remember I said it was overbought earlier, over 70? Anytime it's below 30, it's oversold. But the caveat to that is that it can remain in an oversold status for an extended period. This is several weeks right here overbought, because everybody was just happy. It's like, oh man, it's going up. Man, another week. I'll buy it even higher. I'll buy it at this. I'll pay even more. And then it gets to an exhaustion point, and the sell-off occurs, and people take profit. And then when they take profit, you'll see fear hit the market, and you will see a spike in volume. That's fear in the market. Now, when you have consecutive weeks of fear, 1 week, 2 weeks, 3, 4, and 5 consecutive weeks of just absolute fear, unknown, uncertainty, lockdown, that type of market is tough to quickly rebound from. I say, like you hear people 1.5 years, 3.5 years, 4 years, we don't know to get that cycle. But what we'll look for is that you look for the return to find that basin, that kind of like a little bit of a recovery. I could draw a little cup around that, a little bowl, because price action will find a little bit of stabilization on a chart like that. Now, bear with me. Let me find one thing. I've touched on Black Swan. I've touched on the, if we don't want to, I trade, but I invest long term too. And I know if I buy, okay, here's a stock that I've always liked, Microsoft. I'm a fan of Microsoft. But right now, if I were to step into Microsoft, and Microsoft's still on, actually, that's still a bullish chart, overall chart. Now, if we go in closer, right in this period right here, let me back out. Excuse me, right there. You can get this little area right here. You had a run up March, April, May, July. Now this is 2018. Had a little bit of a sell-off, and the sell-offs are not even that huge with Microsoft. These candles are tiny, and there's a lot of price stabilization. And if we remember, this orange line, guys, is the 50-day moving average, or the 50 period. And it stayed above that. It just trended above it, stayed on there, pull back, and everything has to pull back to continue up. It pulled back and found another run. And we talked about market cycle a little while ago. We talked about accumulation. What is it? We have accumulation, distribution. Let me pull that back up. Let's pull market cycle one more time. Consolidation is the one almost similar to accumulation, but the markup phase, that's when price is going up. But the accumulation phase is when it's almost trending in. Let's see. Thank you very much, Rose. Thank you. Thank you. And there's a phrase that I like to use, though, is like the accumulation phrase also, but it's also a consolidation period where price consolidates right in here. You see how that's kind of a longer candle, lengthier body, kind of a tail there. There's not a lot of crazy tails except over here on Microsoft. That's the accumulation phase, or it's a price is consolidating. And a lot of times when the accumulation or when it consolidates within a bull trend and you're going to see a breakout. Now, you can't guarantee a breakout, but the breakdowns haven't been going very far down for Microsoft is a stronger thing. So if I'm to step into Microsoft during this period right now, it's at 137. Robinhood gave me that at 130, I think. I got that free stock. Consolidation is the same as accumulation, but price, let's see, Jessica. I'm going to pull up the official definition. Because let's say price is at 75, 85, 65. Consolidation price is a little bit tighter ranges. Debt consolidation, yeah, we don't want to do that. They better pay off the student loans. Let's get that taken care of for the kids. Okay, consolidation is a technical analysis term referring to security prices oscillating within a corridor and is generally interpreted as market indecisive. Another word, consolidation is used in technical analysis to describe the movement of a stock's price at trading levels. Consolidation is generally regarded as a period of indecision, which ends when the price of the asset moves above or below the prices in the trading pattern. Well, it's in a trading range, and it's similar, man, it's the same as accumulation to me, because when it consolidates, everybody's getting these shares. They're buying shares, whether there's a sell-off here, sell-off there, and then the breakout comes. If I buy Microsoft now, I'm buying it with the idea that I could buy it at 132. Before I know it, that thing could be at $98 at that particular support level at 97.35. And if I'm a long-term investor, I see that as another discount. But if I'm short-term, I'd have to trade Microsoft, and that's a little bit more of a trickier run right now. So guys, if you're going to buy, you buy with the understanding that this market may indeed leg lower. It, like last week, market closed down 913 points, right? And then after hours, right now, market is the futures right now, guys, are down 157 points, but it was down another 900 in after hours. And if we look at the futures right now, we would open down at 18,680. So, and the line in the sand for me for the Dow Jones Industrial Average last week, I said it was 20,000. If it fell below 20,000 and picked up any steam, it falls below and it continues down. And we have to go back to a historic time frame to remember when we've reached these levels. So guys, remember when I said support and resistance? Support is below you. It's a price level that is below the current price. And this level 18.5 is a support level right now. 18.6, if we fall below that, it's not, we still have support, right? In that 18,400 range. And when I say that, I'm seeing all, and just guys, bear with me, this is something that you can really use down the road. See how the price is not going up and down right here. It finds like a level and it stays. I could draw my line across 18, let's go with the 18,544 range right now. I'll go across there. In this particular set from July 11, 2016 through September 5, 2016, that week, price stayed in that range right there. That's a support level. Now let's back out and show what the current price is. 18.5. We're currently in these are the futures. The low right now is 18,500. We've actually fallen below that support level, guys. We're down 522. So look, we're pushing it, fellas. The next support level, and this is wow, this is great. I'm not happy about this going down. I'm saying we might run into the 17,899. We might test that today before the market even opens tomorrow. And Rand Paul wanted to go swimming after in the Senate pool with Corona. So there's going to be some more fear. And I'm gonna be honest with you guys. I'm short right now. We'll talk about that a little later. But this is key. This market is trending down, guys. Look at, if you see the price right now, you can see it over here. We're down 767 points. There's going to be buying opportunities. Remember, but if you buy with that idea that it could go below this, and if the S&P is going down or the Dow is going down, the stocks that I like could possibly be going down. Now, right now, the stock that I do like during this contagion, guys, is Zoom. That's for a short-term hold. You're going to get your fluctuations, but for a little bit longer, I like Zoom's technology. But everybody is going to be doing webcasts. They're going to have to do. My daughter's going to do her schoolwork on. It's actually Cisco is going to have the Cisco WebEx, I believe. If you guys want to chime in, if you know of any other video conferencing platforms that have publicly traded situations or products, toss them in there. But look at this. You had the sell off on Cisco. This is a weekly. Cisco sold off, but it's not selling off like the other ones. And we found support. You found buying volume, a lot of buying pressure came in. A lot of volume has come in. Let's see, last volume was 207 million, 281 million, 249 million. And look at Cisco is consideration, guys. $35.60. There's no guarantee it's going to stay there. It could go down. It could go down any further. It could go further down. But if you look at it, you do your research real quick. Look, let's go to investors.com. This is where you can find, you can step in and run a quick kind of a market analysis on any particular company that you have interest in. Let's see what everybody's saying, what we have. Google Classroom. So Google is definitely one. Citrix, what is Citrix from the standpoint is there, do you have a stock ticker for Citrix? Okay. Cisco's ranked number 2 in their particular group, computer networking group. ANET is ranked number 1 off of several criteria. Price is kind of high, which is, and I'm saying that, but it's not high if we look relatively in our thought process from where it's come from. But that's how you do your research, guys. You have to vet your particular stocks that you're interested in. This is a website we need all of us to go to on a daily basis, finviz.com. We're looking at Zoom. Now, don't type in ZOOM for your ticker. Last week, people bought the wrong stock. They bought ZOOM and they ran that stock up from like $2 to $60 in a few days. So, okay, we have Zoom. Bullish trend, a lot of chop. This is the consolidation, but it's in a range. It was a weird range. And then you have another bullish pop. There's a lot of volume that's come in. Guys, write this one down. We want to look at average volume. I like to know what the volume is. I need to have my volume over 500,000. I prefer a million. If it's a lower volume, that means not a lot of people are trading. You can get stuck in that stock if you want to get out. You have, for each side, there's 2 sides of a purchase. There's a buyer and a seller. If you don't have enough buyers, sellers can't get out. If you don't have enough sellers, buyers can't move that price up. Okay, ATR is the average true range. That means the distance from basically how far that stock moves within a day. It moves $10.72 as opposed to like a maybe Macy's or Ford. Ford's average true range, it might be up right now because of everything, but its average true range is 43 cents. That takes too long to move if you're looking to get some. Now, stabilization is there, but anyway, let's go a little bit further, guys. Cisco's a good one from the standpoint of the what's going on right now. Everybody's doing a lot of home-based stuff. It's work-at-home software that my job uses. Okay, perfect. Google Classroom. Google is always Google's a high flyer, but the crazy thing is that price has gone down. Guys, you can write these down. Here are some names that I'm looking at as we try to come back. Of course, I'm short a lot of things, but I do like some things for now. When I say come back, I'm looking at 5 years, 3 to 5 years that I'll be excited to look up and say, wow, I'm so happy I got that. I love Microsoft. I love Apple. I love Tesla. Tesla's, but you got to deal with Tesla. Tesla's it might go up 70, down 100, up 150, down 60. Elon Musk will come on and say something crazy and say he's going to sell for 420, and then the cannabis stocks will go up. So you have to deal with you have to also deal with their management. But a buddy of mine, Maurice Jackson, was big on this retail sector. I'm not sure if Mo is in here tonight, but Dollar General was exactly, Kylan, Tesla in the 300s, man. I missed it when it was in the ones, and well, actually I had it brother sold. But anyway, let's look at Dollar General, which we're on a weekly chart. Look, everything has been going red, 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 red. What's Dollar General trying to do? This Dollar General is trying to say we have plenty of toilet paper. We have plenty of paper towels. We don't have any wipes. We have a little Lysol. Come on in. So the run up, pull back. We have the accumulation right in here. Not a lot of difference in price action. Accumulation, consolidation, breakout, which is a markup phase. Now, after a steady bull run, you're going to have distribution. Now, markdown is the same as distribution, guys, to me. It's because price action will take you down. Now, you have a bull run again. And then what week was this? 2019 pop. And now, remember I said support and resistance, we're at resistance is 162.01. And it's sold off, but it hadn't sold off below like the initial breakouts that it's had. So Dollar General is showing strength in a heavily bearish market. I'm talking about a market that is causing people to, it's a lot of job losses. So guys, we're looking long term. I know that's $140. You start looking at companies that have a historic track record that you know that'll be there for you down the road. Another one that I like is I'm a fan of Uber, you know, but we're going into the speculative side of things like that because we're banking on now Uber has cash, but they weren't turning a profit. But Uber, I like to have the smartest people in the room on my team. I think that the buying volumes coming back into Uber. Now that's not to say to go in and buy right now. They won't go around $12. You could buy today. Thing might go up to 55 in 2 weeks. Same with Zoom. You know, so you enter at your own risk. And let's go back over to the Dow, guys. Look, it's the Dow futures. Remember I mentioned that price level, that support level. Let's go to the 5. Let's go. Geez. It's going to be an important day tomorrow, guys. That dotted line, that means basically start of a new day, a new trading day. So it's officially, I mean, it's the 22nd for us, and we're in the futures right now. We're going to go into the pre-market. The lowest that has been today. Okay, now watch this price action populate. And I hope you're not bored, guys. Let me know if you're bored in here. I put D Nice on, and we can go back to status quo. But I do want to hear D Nice. I heard Anthony Hamilton is going to be on IG too. But this is historic. If we can find a way, guys, like family, if you're trying to get into the market, if you haven't purchased your first share of stock, my recommendation, I use TD Ameritrade. You can go to tdameritrade.com and do that. You don't have to fund it, but you have to, you know, go through the process, setting everything up, or you open a new account, and it will walk you through. There will be verification steps. You know, and the idea, if you've never set one up, you're going with your individual brokerage account, unless you're going with a Roth IRA. You want to go for your retirement account on your own. Now, also, if you want to set one up for your children, you have that joint. Basically, it's a uniform. It's a custodial account. I had one set up with my son when he was younger. I have one for my daughter. She's in Charles Schwab, but you can do the Uniform Gift to Minors Act or Uniform Tenant to Minors. But you can actually call them to find out which one's the best for you. There's an IRA for the minors as well, your educational savings, but we go through the individual brokerage. Let's just say you guys want to get in tonight. You hit that, you walk through the process. Do you already have a paper trade or paper money account? The thing about it, they give you a paper money account. So the only things you need are your social security number. You won't need that if you're a U.S. citizen. Employer's name, and address and phone number. And I didn't get an employer verification, so if it needs to be a friend, whomever, if you're self-employed or if you're unemployed, you put yourself down, put a phone number, and let's keep moving. Because this is a time to do it. Or you can go to I don't like Robinhood for the trading aspect, but it was simple for um, for my wife. My wife loves Robinhood because on the phone, their mobile app, she doesn't just get online and there it is, log out. Well, how did I not find that? And she likes the ease of operation with Robinhood. Um, let's see, see what you have here. Stash. Okay, we have some names right here. We have Robinhood, we have Stash. But now, okay, with Robinhood, if you're a long-term investor, if you're a new investor, uh, make sure you talk. Perfect. Good call, Daryl. Thank you, man. Uh, now, they're not going to verify if they say how long have you been trading. It's not like it's like for investing. It's to protect us, to not give you like you get the ability to well, okay, there we go, Steph. No reason to use Robinhood. Good point, man. It's a great point. I was just making a statement that my wife actually liked the fact that the little news clips that came, and I was on Robinhood when it first started before everybody went to the no commissions, zero commissions. The thing about it, they shot their bazooka, and everybody went to that, and they didn't have another bullet. So I think they're a takeover candidate. But I love TD. My son loves TD. People use Fidelity, but you can also negotiate with these people. If you start trading, which I suggest that you don't make that your first move. Now let's go back to this market, guys. We're down. If we fall through that 17,899, we're gonna get the circuit breakers put in place. Do you remember those from last week? We had circuit breakers that popped. It seemed like every day, and when the circuit breakers popped, Robinhood's server popped. So that's I was trading them. I was being cheap and trading. I don't want to pay commission, but if I can't out earn the cost of my commission, I have no business trying to trade in a live market. So that just that I was just being cheap. Okay, what is a circuit breaker? Here's key. Circuit breakers are regulatory measures to temporarily halt in trading on an exchange or panic selling. Now, remember, we're talking about panic, fear. There's a lot of everyone's scared. There is contagion, there's chaos, and there's also psychological contagion, and it's spreading. But we can settle this. If you get in, if you find the stock that you like, right now, Trump is on there. He's praising. Okay, guys, listen. Remember, okay, here's how you find signal. President Trump is on right now. He's praising Google, Amazon, and Microsoft for help with with the uh, with the virus. So listen, Trump activates National Guard in California, New York, Washington State to fight coronavirus. Okay, guys, we're gonna be red all day tomorrow. I can't say it. Stamp it. It's gonna be a red day unless they pass that stimulus. But Rand Paul came in there, got in the pool when everybody is, and he's positive. So can you tell us why? Oh, I'm begging you from the bottom of my heart, don't use Robinhood for trade. Okay, look, Jessica, I actually like Robinhood. I like the look of it, this and that, but I'm a trader mostly. And Robinhood has taken my money from the standpoint of when it freezes up in the middle of a trade or you can't get on the platform, you can't, if you want to get your money out. These are rare occurrences, but they've happened during high volume periods. And it's just a basic, if you're looking right now to really study, to learn, I suggest Thinkorswim is top notch for me because you can do so much on here. There's education, and it pulls up a blank screen for you. But you can. I don't want to freeze up, but you can study. You can learn. I can replay. I can replay my entire day in the market. Now that's when you go a little bit further. Uh, Future's so true about Robinhood. Cost me money last week. Thank goodness I also have TDA. Uh, Perfect. And guys, keep that going. Let me go a little further into this. What I want to talk about: um, the pandemics, financial crisis, the black swan. If you plan to take advantage of a great company, whose stock price is 50% off recent highs. We talked about we purchased with that caveat, understanding that you know that you say, "Oh, I'm prepared for a long-term thing," and then that thing you buy it at 70 and it's down to 33, and you put $2,500 of your son's college money in there, and you're like, wait a second, do I need to get out of here and sell? But he's only 4, and you put it into Microsoft, or you put it into another company that has just a long-term track record. You might want to rethink that, step back, not a short-term mindset. We're not in that process, long-term. And if you need the money on Wednesday, you might as well go to a dice game and try to win that money, because the market is unpredictable. But we know what trends are looking like. We know what a trend is. This is a downward trend. This is a negative trend, a bear trend. Same as a bear market. It's very hard to overcome that. Now, this is a 10-minute chart, guys, that I'm looking at. It's easier to overcome on a shorter time frame. But if you look at a trend on that's established over weeks, and we're coming down to 17,899, we are not getting back to 26,663 before Easter. That's not happening. We might try to trend between here and the next. So everything that was support, when I said we have an agreement like price levels as support that things kind of stop at and bounce off of, or if they break through, support eventually becomes resistance on the way up. And you have to rectify that again. You have to go through that, because price has a memory. Everyone remembers that 20,000 was a tough threshold to break through. If I back out just a little bit and show you, let me show you on the hourly the other day, I was looking at 20,000. Now this is on my market. This is the most recent, one second. Trump is using a lot, my buddy just said Trump's using a lot of interesting verbiage. Remember, we're talking about signal, and you decipher through the noise and look for, well, he mentioned Microsoft, Google, and Amazon. So we're going to keep an eye on those. But okay, this date was March 4th. This is an hourly chart. March 4th, let me take I need to take this off so you guys can see it. You want to have a clean chart sometimes when you're looking at things. It makes it so much easier to kind of really decipher. Bear with me, guys. Volume sub grab, highlight extended. I don't want to see the we won't do the rollover lines today. All right. Okay. 4th, 5th, and it's okay, hourly chart going down, and the previous resistance level was 440. And I established that when I saw price kind of consolidated right around there. And when I say consolidation, this isn't accumulation. People they are not accumulating these shares. They're consolidating because people are trying to get out and find a way, hopefully you find a base. And the idea was to go back up like that. Something happened. That date was the 12th. I can't remember, but I know there was an issue. Sell off. Now 22,440 becomes resistance. Boom, sell off, trying to get up. They go up there. It tests 22,440. What's the high? 22,397. And there's going to be a little leeway between that pricing. Tested it, couldn't do it, sold off. opened up here, tried to break above, sold off, and now we're trying to establish what the next level of support was. And previous support, this was like back in 2016, where that 20,000 level was kind of established. Ran up, it broke above that, couldn't hold it. The sell-off came, and we had some issues. We test the 20,000, boom, test it. And the more times you tap a particular support level or trend line, once you do finally break through that, you break through with a lot of gusto or a lot of emphasis in volume or power. It fell through. We bought it back up. It can break really much higher. But anyway, we trended right in this little trading range on the hourly. And the issue is right now it's pouring out of bed. So we were going, if you look, the trend initially was like, we're going straight, like at this angle, down, 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 down. And then price kind of stabilized around 20,000 and we didn't go any lower. We kind of stayed in the trading range. We found some support. So, okay, 20,000 might be the ones. If the stimulus package had come through around here, there's a chance we could have zoomed up or stabilized a little bit more in the trading range and found a way to stair step our way back up above the 22,440. But it didn't, fell through again and tumbled. So guys, be prepared. Futures just hit limit down. Okay, thank you, Steph. Limit down, that's basically, it's the circuit breaker's in place. It stopped. There's no more trading, guys. We're going to open lower. There's now, it's not to say there's sell orders are done. It just means that it's going to be a red day today or tomorrow. And let's go to the next segment. Before I move on, if you have any questions, if I'm going too fast, hopefully if you're getting anything out of this, please let me know. So I talked about market cycle, bullish, bearish. I talked about correction. I talked about signal. I don't want to bore you. And the reason I'm going with a lot of this definition, okay, here we go. Limit down. The limit down price is the maximum allowable decline in the price of a stock or commodity in a single trading day. The limits were introduced to forestall unusual market volatility and to counteract the panic selling that tends to compound initial price decline. Limit down, they can also go limit up. But trading curbs kick in is to protect, they said protect us from ourselves, because if the sky is falling and people want to get the hell out, they're going to try to put orders in to sell, and they set the futures up, and it's big. Okay, great, Janice. Thank you. And all right, Celeste. Okay, perfect. I just want to make sure that we have it all, that's coming in now. Let's go a little further, guys. I swear, I think this is important. I mean, so right now, if we can perform the tasks that have kind of historically not been, we've been blanketly kind of as black, brown, and anyone that's financially disenfranchised, they've hidden a lot of stuff in books. Excuse me. They've hidden a lot of things in books. A lot of times a 9 to 5, not a lot of time, not a lot of free money to make, we're trying to make ends meet historically with the family. I don't have $1,000 off rip to just put into a stock. Are you serious? But what they have now, they have, hey, Dr. Lyons, that's my collegiate professor. Thank you. What they have now, what I do like is fractional shares. So let's say your young one might be 18 years old. He's working a regular job, getting a trade, or he's in school. He said, I have $36. He can participate in Tesla. He can buy McDonald's. He can buy a share of the SPY. He can buy fractional shares. I think Stash. Guys, put some in there that you guys use for the those easy apps that the millennials love. And I follow the millennials, man. That's the group that's going to push innovation. Acorns, anything. Another thing, guys, that anytime you see Bitcoin, to me, Bitcoin, Ethereum, XRP. Now, look, we get into the speculative side of things when I start going into crypto, but my family knows, my son knows, uh, my wife knows that I'm the dude that if you give me the money to go to the store uh, to buy groceries, I might buy the jumping beans. If a dude is selling some magic jumping beans out there outside, my wife will have to just like look at just come back with the grapes, the spring water and blah blah, and don't do anything else. Okay, every time I might come back, and still I might come back with a toy. That's just me. But Bitcoin, anytime I see somebody just get overly angry because of a new technology, something new, they get mad that there's digital currency. Are you serious? So you're angry. I'm not spending $5 when I go up to the moon, or if we go up to the space station. I don't have cash. They're going to go into my cloud wallet, man. That kind of thing. So open our minds on that side. I'm kind of getting a little weird with that, but that's just me. So let's go to the next step, guys. We got to find signal. We find signal. So I, I've been there's a young brother on BSI that he's an amazing researcher. Does a lot of high lows, 52-week highs and lows, and he's been calling for a market rebound for a few weeks. He said, I think it's hit his bottom. I think in this is, and I kind of hopped in, wasn't trolling, but I was saying that it's unsafe to call a market bottom in a historically we hadn't seen this before. We've seen the mortgage crisis, but they're talking about Great Depression era type pullbacks. So we that they've thrown money at this market. They've thrown money at the overnight repos in the banks, and the market has gobbled that up like it was. I don't know, man. It's just eating it up. And so the thing with that, we could retest the support of, I think, Kylan, 2016. What was that level on the Dow? Are you looking at the Dow for that? Because I thought we're coming up on that, man. Price has a memory. Now, there's one good little thing that's on this screen right here. That's called a gap down in price. We gap down, and after, basically in the futures. So a gap means that where there is no price action that occurred. It closed right here at this period, which was we're on the hourly. It closed at the 3 p.m. hour at the price of 18,883 and opened down at 18,500. So down over 300 handles without price action. So that has to be rectified. That will be, so all gaps will be closed, or all gaps must be closed, but you don't know when. So, and it's going, we have a lot of overhead supply, a lot of price action above us to where it's going to be a tough climb back up. But anyway, let me go a little bit further, guys. Just stay with me. I wrote down, about sifting for signal. If you're reading the Money Magazine, if you're reading the Wall Street Journal, if you're reading Investors Business Daily, Barron's, the Financial Times, even the New York Post, anything, you're looking for signal. If you watch CNBC, if you watch Bloomberg, let people say, man, why are you always watching that? Or, you watch it. You're looking for signal, okay? He mentions the mask companies, APT. We'll go into that. Like the coronavirus companies that are just, that are getting a lot of pub, you have to know basically whether this is going to be a long-term hold or if this is just for the contagion. Because this particular company, it thrives during contagion, during chaos. But when chaos ends, it goes back to its trend line of like that $3.53, $4 or $5, because it's been up to the high of $41.59. Bose Agnew in the Black Stock Investors Group, he mentioned this, and I hopped in, grabbed some calls, and I caught a nice rip. But if you look at your RSI, guys, when you do this, when you start trying to, because everybody wants to start trading at $3, $5, $7, and think before they start investing. So if you do, I think it's a fool's endeavor. Not to say you're a fool. I like to use that phrase, but if you're gonna do it, which I suggest you don't, you need to pay attention to the run up and the sell off, because people will watch. We're gonna watch you run up, man. I'm gonna run you up, and I'm gonna get out. I'm hopping off that train. You sell into strength, and when that gets up here, this is when everybody starts buying. They start hopping in. They're going, have you heard about the mask company? There's a lot of N95s. And then they even opened up even higher. Or you knew it, man. It was at that, what's the high? 41.59. And that's within that same day. Opened it, what was it? Open 37.23. It ran up to 41.59 and it closed at 21. That'll hurt your heart, because I heard some people, they got excited about it, and they were thinking about sinking some real money in a really small mask company that, they've been mobilized to do a lot, but you just don't have a track record. You're going to put $5,000 in something. You go to your blue chips, or you go to your index funds like the S&P and the NASDAQ, and then and during this climate, you go in realizing that $5,000 might take a haircut. It might be $3,500 in value. It's not, you didn't lose the money, you lost value. And you're going to need time. You need a full market cycle, because you might be buying during distribution or markdown. And you need time for the accumulation, markup, and that run again. That could take 3 to 5 years. If you have 10, and I learned this in grad school at Grambling State University also, Dr. Lyons, one of his first statements was, on average, the market goes up. At that time, it might have been 11%. We were about to head into the dot-com era. I do remember that. And that's, the market's going to come back. But we got to shake it out, man. It's just like with Bitcoin. When Bitcoin was up, everybody had a network marketing program that was tied to crypto. Buy my coin, it's tied to gold. You have a gold mine? Oh, it's backed by physical gold. Well, that's not the open source that we're looking for. I don't, I want supply and demand to back mine, that kind of thing. But anyway, next step with that, I'm off on a tangent again, guys. But you don't have to pay for basic knowledge of this market, of the stock market. This market, this information comes with a library card, and some, maybe a couple late charges. You don't have to pay for that. You just keep diving into these. Like, here's a website that I look at every day. I'll go to Market Watch, if I can get it up, marketwatch.com. Y'all can write that down. I've already shown you finviz.com. And if we go to the home part of FinViz, now I'm not giving you paid website. These are all free. Look at that. That shows you just the total market, and it's all 98% red. That was from Friday's close. But you have a way to sift through a lot of these top gainers, new high, unusual volume, upgrades, downgrades. You can go through and study that. But what we do I like the news. The news gives you signal. If we know how to sift through that news, we can find ways to, if you're going to make a trade or if you're going to invest in something. Right now, current news. And you got to have current news if you're staying in this market, because and I keep President Trump, I'm giving him the respect that I wanted President Obama to have. So I keep his Twitter handle on my thing, and I get the alerts, because he can move the market with his words. That's plain and simple. It moves market. So, 6:12 p.m. McDonald's to temporarily close all UK, Ireland restaurants amid coronavirus outbreak. Guarantee tomorrow McDonald's is going to see a down pull, because that's hitting the bottom line. Now, I'm not saying McDonald's is a long-term sell, but I'm a trader. I'm a long-term investor, but right now, this is a trader's market, and I'm saving money. Basically, when I look at the news, I need to let's see where we are. Let's see what I missed. Regular view my account. Okay, okay. You can learn to invest for free, but learn to trade is worth. Absolutely, I was getting at that. Great point. I'm gonna get to that stuff. Thank you, and I'll let you guys step in a second. Okay, version of companies. Just you guys have to go through here, and Steph is on. He gets into the forex market too, the foreign exchange, and that's key because we see the activity prior to the market. We see the activity happen in the foreign exchange market with the currencies. You know, whether it's the dollar with the pairs with the Great British Pound, just those are key things that we focus on. So go here and let's go to Benzinga. It's a weird name, but you get a lot of news. A new arsenal. You also get a lot of ads because I'm not spending money on it right now. The only thing I'm buying, purchased membership to Investors Business Daily, and I'll show you that in a second. Go to Benzinga. Seeking Alpha. I talk about looking for signal. Alpha is basically it's not A5A. It's not A5A. I'm sorry if y'all, and it's not FAMU for Kylan, it's Grambling. But anyway, if you're seeking alpha, alpha is what gives us the chance to outpace the average of the market. We're looking to beat, well, you want to just have a positive return. But alpha, you're looking for something that's going to give you a leg up on, what's average. Just a lot of good stories. People follow a lot of different, I guess, contributors. And Investors Business Daily, you go to, it's just investors.com. I like the physical newspaper because they do a lot. Let's just go to DG. Shout out to Maurice Jackson. He's in the room, and I'll segue him real quick. And then Kyler, King Steph. But Dollar General, I just think that chart is something special right now. I'm a true novice, but I do recommend Forex. Oh, Ben, okay, you like Forex? Well, I okay, guys, let's just trend into that, and I'm gonna pull Maurice in, and I'll pull Steph in. Um, 1 second. What's going on, Maurice?
What's up, bro? How you doing?
All right, man. Steph, I appreciate the brothers coming in real quick. Let me just go
For sure.
one thing. Got a family show going today, so you know how we every so often we get a little uh,
I,
rowdy.
I try to tone it down, man. You know me
Yeah,
though.
I know. I want your passion, so people know. Okay, let's look at this. I'm telling everybody about the long-term investing, but I noticed in our group the shiny object in the room is trading, which is the risky. It's how you, but it's the only way right now for you to make short-term money to protect you. It's a hedge, in my opinion. But you need. I truly feel if you're going to trade, gotta have a support system in place. But tell me about Dollar General. Do you have you want to take the screen, Mo?
I don't. Uh, I don't have
Well,
no
you don't
chart,
have
so
to. No, I got it. I'm
um,
looking right here, man. What did you see in Dollar General or in that sector that told you, okay, within this negative downtrend that's just going on, that say, hey, this is something to keep an eye on?
I saw a few things. It's a few things that I look for, but I mean, you kind of hit it right on the head. Was the fact that it maintained relative price strength in a sea of red. It was floating. So any of those companies that when the market is in a major downtrend is doing relatively well. The market's down 10 or 11%, but they may be only down 1 or 2 like that. And most of the other stocks are down 7, 8, 9% along
Right.
with the market. Like, that stands out. So, and then also just kind of expecting this market downturn and then looking to a possible recession, looking to those companies that will do well in I guess a down economy or a down market. I mean, discount retail is, I mean, folks
Yeah, everybody trying
going,
to save money.
everybody gonna tighten that belt. So Dollar General and Dollar Tree, move to the top of the list for me. So
Well, okay. And Steph, what are
Yeah.
your thoughts, man, when you guys are looking in that room on the Forex markets and you're checking, like you're seeing, is there ever anything you spot overnight or in that early session that you say, you know what, man, this gonna trickle over into the US markets?
Kind of, but for me, I look for. I mean, I really don't have any loyalty to anything. So before I look for the overall, I look for the setup. So I'll look through, 5 or 10 pairs, uh, and see what's setting up. And
So you're going
usually,
straight technical from the standpoint of like, okay,
straight technical.
okay,
Unless it's like some news popping, but like I try to keep it literally as simple as you can get.
okay. Everybody listen, we're talking right now is the technical analysis for Steph. And I'm a technical trader, but I also have to have for a news catalyst, but I also look at charts. The charts are basically talking to us. If you look at it, read the definition of technical analysis. Technical analysis is a trading discipline employed to evaluate investments and identify trading opportunities by analyzing trends gathered from trading activity such as price movement and volume. So, okay, let's just say if let me check the chat real quick. Charts are the footprint of a beautiful man.
yep.
True lover novice, but I do recommend. Hey, everybody is liking Kroger, man.
Yeah, I was
What's
looking
Kroger?
at that one before. I had wanted to mention that Kroger along with Dollar General, like another thing that I look at, just like you mentioned, Investors Business Daily. Like I always tell people, I read that religiously, and I actually was going through the paper. I go old school, and I was going through the paper today and looking
Yeah.
through the ratings. And one thing that I went through and noticed in retail was there were quite a few retail stocks that have been showing um, accumulation by funds where most of
Mm.
retail is showing distribution. Like they have a rating system, and usually if they have it rated A, B, C, D, E, and most of the retail sector had all E's um, for accumulation and distribution, meaning that funds are selling them. But there were a select few that caught my eye, and Kroger was one of them that was showing some accumulation. And
Y'all see the screen right now?
and Sprouts Farmers Market, that one right there,
What?
that was another one
Can you
that
see
was
the
showing
screen?
accumulation.
Yeah, we can see it.
Oh, okay. You talking about SFN? Okay.
Yeah, both of those, Kroger and Sprouts Farmers Market, have both been showing some accumulation
Okay.
the last few weeks.
All right, family who's on the call or the message or whatever. Not these aren't buy, sell, or hold recommendations. These are this is these are legit companies with track records, with history, with earnings. You do your own due diligence. We can do the research. I've given you the names of those websites to go through, and it takes a little bit more study. The idea is that if you do that, Dave Ramsey says you do what to say, you do what's the hard thing, or do what people don't want to do, or yeah. Anyway, if you do something that do all this studying that everybody's like, man, I'm not doing that. I'm looking at this. In the long run, it's gonna pay off to where it's like, man, what did you do how did you get to this point where you have this saved up? And if you're in your 20s, you got plenty of time to don't be afraid of this market. If you have a 401k, you're doing your employer backed or employer funded retirement account, and if you're getting a match, you can't sit back. You cannot sit out. Now, I continue to stress the fact that if you buy, it's a real good chance you buy. You look up next week, you tell your girls or anybody like, I got into such and such, and the thing's down 30%. You're like, you got to be kidding me. You don't have to check it every week. If you're going long term, it might be every few weeks. In this market, you don't want to just turn your back on it. But if your company doesn't have any, let me show you a company that has contagion that you need to let settle. And I've been trading this sucker, man, for a year. And Maurice knows which one I'm going to. Boeing. Now, Boeing historically.
Yep. We've been tracking this one a good year and some change, bro.
It's historic. It was a stalwart, and I love Boeing's aerospace sector. I love their I love the fact that they have innovation, but they drop the ball on a lot of things, and the contagion has come into play, and the people have been slow to downgrade them. But when you start seeing stuff about Senate GOP coronavirus or congressional hearings, Boeing suspends dividend, Congress wary of massive bailout. You start looking further down into the news ticker. Their supply chain has issues. Spirit Aerosystem halts workforce. You cannot go into it and buy right now. Let me see. Hold on, I'm going to mute that. I had a little background. But you can't go into it and buy Boeing right away without expecting a congressional hearing and a share, just a heavily, even more of a discount. People say it's too big to fail. Their supply chain is too large. But right now, Boeing has drawn on all their creditors, all the credit lines. They've reached a tipping point. So that's one that's a really big one. And the Boeing drags the Dow down. The Dow's, it's that basket of 30 stocks, the average price, but they're all weighted differently. And Boeing's heavy. Like my uncle said, that's heavy, man. It's heavy. So let me give you a real quick chart breakdown. Okay, we're looking at a daily chart on Boeing. I wrote down, I had some historic price levels that I had in the past, and be fearful when others are greedy, be greedy when others are fearful. Okay, I like the phrase, and if we can do it with the right stocks too, we vet it with the right stocks, Ben. When people are running, now Boeing right now, people are running out of it in a historic pace. And the volume is picking up like it's a beast, like a killing beast, man. Like you had the sell off all those days in a row, and you had the buying action, but that people covered. People, you got to take your profit at some point. So look up this, you go candlestick patterns, and we want to know what gravestone doji, basically a basic doji right here, which supposedly signifies a trend reversal, but it's really indecision. And another doji and more selling pressure, and the volume has increased. And so we're at 41 million, 61 million, 54 million. And Boeing has a long way to go. I want to give you guys a couple more things. So the idea, we're going to assess the climate of this market, and it's a seller's market right now. It's a fearful market. It's the issue that we have is we don't know what's going on, and everybody was waiting for basically waiting for the stimulus package to come up. But today, man, I mean, Pelosi put that on hold. Basically, the Democrats block. It says Democrats. I'm watching Bloomberg. Democrats block Senate stimulus bill after negotiations falter. Okay, so they're at an impasse. We can't find We can't find common ground. Boom. That's a weakness already. Okay. And then Rand Paul tests positive for corona and says he's been at home, working from home, so he hadn't been in contact. Then other Republican, his colleagues were saying that, oh, we saw him. He was at a lunch a few days ago, and also we saw him this morning. Today he was tested positive, but he was there this morning in the gym and in the pool, and they're scared. So fear has reached Capitol Hill. They had to be in person to vote. That spread is about to happen within there. I see more weakness. I see fear. I can't predict it. I just react to price. And also, here are a few sectors, and I'm gonna wrap up, guys. I'm not gonna hold you up, and I'll answer questions if you want to put stuff in there or get on the mic. I believe Paul. Yeah, man. Yeah, man. He got in the doggone senator's swimming pool. Now, anyway, there's sectors that I'm looking at that are as we go week by week, and we're dealing with this. We talked about dollar cost averaging. We just mentioned Kroger. We just mentioned Dollar General. I'll write down, or I'll put together baskets of stocks. So we have, Space Race, Airlines basket, coronavirus. Like, I should put what Cardi B, anyway, the cruise industry, defense sector, gaming, all the way down, beauty sector. Now, last week, a couple of days ago, the cruise industry, they popped. They went up, but Activision shouldn't be on there. But anyway, Carnival, Norwegian, and Royal Caribbean, they went up. And when a politician says there was no reason for those particular companies to go up during a negative, the stimulus didn't pass. They weren't involved in that at that point. They went up. There's something afoot. That's what we watched Knives Out, and that was the big thing that the dude was saying in that. Is Norwegian's falling below that. I check the news on here. You guys get Thinkorswim. Look for any signal this coming up in NCLH. Excuse me. NCH, there we go. Anything that pops up, travel and casino stocks are soaring. It's like on the 20th. There was no reason for that to happen. And it says then the next, after hours, the debt heavy industries stand to fare worse during the virus crisis. Okay, now this is signal right here, family. Take a look. When the world emerges from the coronavirus pandemic, hopefully sooner rather than later, some businesses and perhaps entire industries will probably have vanished, absent a federal rescue. Let's go down a little bit further. Corporate debt, that's signal. Corporate debt, highest peak we've ever had, 45% domestic product. In short, the country is about to be awash in junk debt. Boeing was lowered down to just above junk bond status. A couple of other companies. By year end, Altman expects the default rate on high yield bonds, when they say default rate, to rise as high as 10%. So people aren't going to get their yield. People are defaulting. So here are the sectors. Airlines, they need that bailout bad, and they're still negotiating. I think they're going to get it because it's like the backbone of transit, of commerce, our connectivity around the world. Energy sectors catching fury. Cruise operators, they're going to catch it. And also, guys, they said private equity, but here's a section that you need that I really feel that's big. The casinos, the gaming areas, not the video games, but like Boyd Casino. And let me see if I can get Stefan back up on here.
But
Oh, you still there? Okay.
yes, sir.
Okay, man. Now you mentioned last week or a couple of weeks ago where you're talking about, hey man, they're probably going to they're probably going to put things on lockdown over here because you're in Vegas. Steph's in Vegas. What about the casino sector that that you noticed during the last time it happened, or any time that kind of concerns you, or that that you kind of picked up on during this process?
Oh man. Only thing that I've noticed is LVS is the only one that's kind of staying
Yeah,
afloat.
Las Vegas. And I know we talked about that last week. And you said the last time you guys had a big drawdown, Las Vegas Sands found a way to figure it out. Look at the buying volume in Las Vegas Sands. Everybody's going all red. Let me compare that right now to Boeing real quick. Let me show the same chart. Same chart. Boeing's trying to find a little base right there, but that's anyway. We go back to LVS. And I just think now that's the anomaly for me. LVS is an anomaly in this sector. Like MGM. And MGM had a little pop, but this is weak. That's a buying pressure, but I think that's basically they're covering the shorts, or they're taking, not covering the shorts, but they're taking that profit. The other section, wind. Now, last week, everybody in that sector had a little bit of a pop, but a lot of downsides. Guys, be careful.
When, oh,
Go
go
ahead.
ahead.
You got
No, I
it.
was just about to say, when was this? They were just the first people to announce that they were shutting down the casinos. So
Okay.
they started the run.
Well, we're going to go to the airlines real quick. This is the airlines basket. And I'll go over I don't know how I drew on my thing. Did I annotate? I can remove that. Anyway, think about this. I'm short American right now. I'm short American Airlines. It's just the fact that that's the trend that we're in right now. This is a weekly chart. Each candle represents a week. Not saying I'm happy that I'm definitely not happy it's going down, but the chart is beautiful. Double tops, guys, and we can actually it's a triple top, or we can say that's a head and shoulders. If I want to draw that for you guys real quick. This is the head, and these are technical analysis phrases or terms. Those are the head. Let's remove the drawing. Head, left shoulder, right shoulder. The idea is you draw your trend line across right there at the bottom of the neckline. And I go across, a lot of times I can go across right there. And price, a head and shoulders takes a while to establish itself. And you can see it on the chart coming, and you need to see it break that trend line a little bit. And if this is a long-term investing type situation, it's a bearish play. You can do reverse head and shoulders, and then you had your sell-off. Now, right here this is a trading range, but it's a bear channel because prices, we're getting lower highs and usually lower lows, but pretty much lower lows down. And we have it's channeling right there, but it doesn't make a new high. And then we had another catalyst that forced that sell-off. Negative news, and found a little bit of support. This is American, and we're going to have to deal with tomorrow, because look at all the volume. Now, that's what you pay attention to. There's several things on the chart, but the volume a lot of times is a very key factor. And the volume has just popped. 355 million as opposed to like 37 million on the week of January 6, 2020. We're oversold, but like I said, we can stay oversold for a long period, an extended period. To go to the positive side, guys, we talked about the discount retail sector. We talked about Kroger. If you guys want to put some names in the chat box of companies that you're looking on the buy side, I'll get to that, and I'm gonna go real quick over to.
Hold on, before you go,
Yeah.
I just want to explain something. Kind of the difference between investing and trading. Like this is kind of like a perfect setup. So if you see, can I get the mouse real quick?
Let me stop it, and you got it.
No. All you got to do is just give me control of your mouse. So pull your screen back up.
Okay, let's see. All right. And just do the
All
mouse.
right, I'm gonna ask again.
Okay.
'Cause it might not have went through. All right, I just asked for
Got it.
control.
Got it. Oh, well, I'm learning something every day. Thank you.
All right, let's see. Can you see Can
Yeah,
you see
you
the
got
mouse
it.
moving on my end?
You got it.
'Cause I don't see it moving on my end.
It's moving because you're in the top of that
Okay.
channel.
Okay. Perfect. All right. So difference between trading and investing, right? This thing happens even though right now this is on a weekly cycle. These patterns happen um, on the minute, hour, whatever. So your goal as a trader, even as an investor, if you want to capitalize on making more money, um, you want to take advantage of these channels, right? So as soon as you notice the pattern, this trend line, so you need to see it tap 2 times before it's an actual trend, right? So you see it tap here, tap here, tap there, tap there. So you can you could buy a put on this day, sell it the next day, buy it the next or buy it the next day, and then once you see it, just tap that line and you buy it back up. So depending on how you can y'all hear me?
Yeah, yeah.
Okay, cool. Yeah, so depending on your outlook and the money that you want to make and how you want to make it, right? So what a swing trader may want to do is, and I'm speaking from an option standpoint. So, you are capitalizing off of the dollar movement, right? So, as a swing trader, you get maximum return if you sell it from here to here. So, you be in that trade for 3 days. I personally don't like being in trades for longer than 3 days. So you can still take advantage of, buying a put here, selling it this day, then buying another put and selling it the other day. That way, the less time that your money is in the market, the less chance you have of losing it. And you can play both sides. So you ride it down to here, and then you ride it right back up to here, ride it up and down. But when you're doing that, anytime that you're trading in a channel, one time you're gonna be wrong. So theoretically, you should win about 10 times, and then right here, when you expecting that bounce back and you buy that call and that price drops, you're gonna lose. But in theory, you should have won enough times here to where this loss isn't gonna bother you, unless you just decided to
Or,
triple down or something.
or
So
at that point, we're at the top of that channel right there. We got a wedge pattern. If you really get into technical analysis, we're let's say we lost on 3 of these trades further back. We see that it channels at the top as we keep going further over, go to the right a little bit, uh, keep going. At the double bottom, we just pattern right here. We're at the trend line. We've recognized this pattern, and it does. And price continues to consolidate right there along that same trend line right there. We look for a price break out of this wedge, and we're waiting for our signal, whether it falls below the low of this little grouping right here, and we'll say, I'm hopping in a put right there, and I'm setting my stop right above the high of this little area, so I can mitigate my losses if it flips up on me. And we hop in that put, that thing would have rolled down. I got in it. We rolled.
now, right
But go
now,
ahead.
go ahead. No,
I-
I was just about to say the fake out right here is what would get you. You see, you always
that.
want to look for handle
Mm-hmm.
closures. So this it jumped out of the trend. So when you see in this real time, you're like, hell yeah, I'm about to get in here. It's finally breaking out. But you see that wick pushed it right back down in the trend. That's what we call a fake out. So it got everybody in here, tricked them, and everybody lost their money. So you have to you can't be overzealous. You have to wait on closures, or I mean, you could do what's called an aggressive entry. Like if you just really got that fear of missing out and you got the money to burn, be like, forget it. Why not? I'm trying to go long, but that fake out happens, and if you got in a call this day, you didn't sell, you was hurting because that was
Well,
a $20 drop.
well, let me Let me grab it back real quick.
Yeah, you got it. You got it.
Okay, let's see. Right. Okay, family. We're going to go into just a little bit of technical analysis, and this is key because the way Stefan was saying, you know, this is a bear channel right here, and it's in the trading range. We're in a bear trend, which means I'm not looking to go long for it. I don't fight trends. You trade with the trend. The trend is your friend. But people do get zealous because let's say, boom, okay, we recognize this trend. It's in the trading range, okay, and I draw the pattern and I track it. So if you try to go long at the top, you won't start your trade here because we're still learning. It's still establishing itself. We're gathering data. So when it's down here, we're not going short because once you learn a little bit of these signals, you'll see somewhat of an exhaustion candle. You get excited because you missed the move. Down here, we're at the bottom of it, and we'll see some doji candles, a little change in trend. So realize at the bottom, the channel's drawn. Only thing we do at the bottom of this channel is we take a tester and we go long, but I'm not going against a negative trend. So I'm waiting for this thing to run up. Hopefully, I wanted to tap that trend line again. So up here, once it does this and taps this trend line, I'm looking for an entry. I'm looking to rather either enter here and buy put or enter here. And let's real quick, I'm not going to keep y'all much longer, guys. I know it's Sunday and people went to virtual church and went to the fellowship hall and on the computer and ate a little bit. But here's what a call is. Gives the person the right to purchase a stock. Okay, here we go. Excuse me. Call options are financial contracts that give the option buyer the right, but not the obligation to buy a stock, bond, or commodity or other asset or instrument at a specified price within the time. So we said earlier we were going long a particular stock, wanted the price to appreciate. That's the same thing as buying a call, but we have a contract. We'll touch on that further in another period, but I just want to give you the definitions, the raw definitions of it. The put option. A put option is a contract giving the owner the right to, but not the obligation to sell or sell short a specified amount of an underlying security at a predetermined price within a specified time frame. A lot of words, a lot of verbiage are basically if we're shorting the stock and we want that price to go down, you're looking on that's similar to a put. But a put also acts as a protective hedge. So if I owned a lot of shares of American and I know I want American to go up, but I see American is just going down, I don't want to sell my position. Maybe I've had it for 20 years. I don't want to cash out. I'm getting a dividend. You can buy a put on that, on American, and it would be a protective hedge. So the idea is you're in your particular option or stock, your average price is $100, and you want to sell that put. The puts trade. I mean, the stock is right now trading at $10.38. So it is just tanking. But if you buy the put that says like the $25 put, that gives you the right to sell 100. Each contract represents 100 shares of stock. Gives you the right to sell that stock at $25 instead of $10.38. It mitigates your loss. It cushions your loss, but you will pay $13.50 per contract for that right. That's the low amount. This is the spread, bid and ask, but we'll just use $13.50. Multiply that by 100. That's $1,350 for that one options contract that will expire August 21st of 2020. So let's say American goes down to $5. You're going to get the value of this options contract will exponentially increase. So it might be 35. That might be $35, and you make let's say it's $33. You make $20, so you make $2,000 on that contract. Now, I'm not saying Americans going that far down, but this isn't in the money. We'll go over this on another session, but I just want y'all to kind of see where we're going on the option side, because it's not just saying I'm shorting this, but people use options to basically hedge their positions. The big traders, I know Carl Icahn said he's been hedged basically for the last 3 years. Nobody hears that all the time, but you hear it in an interview middle of the day, and the CNBC asks the tough questions, and he'll say, well, I've been preparing for this. I've been hedged for 3 years, waiting for something like that. Basically, he's buying an insurance policy, which is a put, and insurance policy doesn't pay off every month. You're going to have to, it may never come into use, and you put that money out there just in case. Now, for me, if we're trading in this and I see the trend, I found my trend. I have enough data to say, okay, at the top's sell-off of the range. We got a double top, got the sell-off. It's not going too far down below, this little area. Found another support level. Got my doji candle. I'm gonna come back to it, guys. I'm gonna wrap it up. Just stick with me. Doji. Very important. Just to know these definitions. Doji is a name for a session in which the candlestick or security has an open and close that are virtually equal and are often components and patterns. Doji candlesticks look like a cross, inverted cross, or plus sign. Alone doji are neutral patterns that are also featured in a number of important patterns. The doji candlestick forms when the security is open and closed, virtually equal, blah, blah, blah. And it's basically there's an impasse. You can't, the bulls and the bears have not taken control of the price action. So a lot of times it signifies a trend reversal or just basically indecision. So everything stays in this range. It's a little bit of a consolidation. We had that, and you had the run up. Now I'm not in, because a lot of times you see doji, you see the green candle, people might get excited to go up. But if we have our pattern, if I have our channel drawn, we know that's a shakeout candle. That's a setup to where that's a bull trap. It's trapping bulls. Somebody who's bullish, really wanting this to come out, they'll get in here. And then I'll look for I won't enter right here. That's our entry candle. There's a gap down. What day was this? This is the 17th, week of February 17th, and then that's the week of the 24th. Gap down, and we're in this thing. And there really wouldn't be a reason for us to get out, because except when we start seeing some little wicks down here. But once we get to this channel, we would probably exit, or we would look for exits at different level of support. And if we found out it's still continuing, you're like, wait a second, let me hop out. Then you find out it breaks the channel and breaks support with heavy volume. That's trouble. That is absolute trouble. And I see people saying, let's go long American. If you're going long, man, you go long. It has to be from an long-term investor's standpoint. But the people who are saying go long American, they're saying it because they're saying it's a discount. It's cheap stock. Not saying because, hey, it's a great company, great management. Do your research on your management. Find out what they think about Parker. Not many of the employees like Parker. They don't like what's going on, but American is a leader. They merged with US Airways, but Delta is the one that kind of comes into play when I look at something that they're struggling right now. But if I go on that daily, Delta last week found a little support, and then next thing you know, they cut capacity by like 60-some%. So the entire sector, and this is an ETF to check the sector. Excuse me. That's the overall sector right there, guys. This is an ETF that follows the airline sector. You telling me is anybody trying to go long airlines? They're going to shut domestic travel down very soon. That's my take. Why? Who's going to fly in a coffin with people coughing, coughing, coughing? Yeah, nobody's trying to get in there unless you just need to go out of the country and you go somewhere else. But it's going to be until they do that stimulus package. It's going to be tough sailing. So be careful with that, guys. Let me look at the chat real quick. Beyond Meat. There we go. Okay, here we go. I know. Hey Mo, you want to take over for Beyond Meat? Mention if you're still there.
Bob, I was on mute. Yeah, I'm still here. I don't have much to say on I don't know.
Look at the
I
daily.
have a negative bias on Beyond Meat since they came out. I just don't like the thought of fake meat. But the statement that I did make to you yesterday that I think is relevant here is, I think with everything going on in the country and kind of like in the same thesis of going with the discount retailers, I see
Right.
Beyond Meat as a luxury product. When the get down going to the get down, um,
Mm-hmm.
people gonna go for those $5 beef burgers before they go for the $15 Beyond burgers. That's just my opinion, unless
Right.
you a die-hard vegan and you really in that life. Like when they get down to the get down and money get tight, them $15 Beyond Meat pack. Like even when I was in the grocery store, I went to the grocery store and had to go to the grocery store a few times in the last week.
Mm-hmm.
And the Beyond Meat, that section was full. Couldn't find no chicken
Fact.
though.
I
I
told my
couldn't
wife.
find no chicken.
Told my wife
Beef
that.
was low, but Beyond Meat was stocked. So just looking at this as a luxury product, I don't
Okay.
if this continues, I don't see it maintained in that high price. I definitely see it falling below.
Now
Just continue to go down.
we're looking at short-term contagion, guys. And let me see the individual who asked that about Beyond Meat. I'm gonna get better at using this Zoom to see. Okay, who asked about Beyond Meat? That's iPhone privately. Okay, iPhone. That's your breakdown on Beyond Meat. If it's a long-term play, you got to make a call on if you believe in the tech. I say technology because it's a tech play, in my opinion, because they're coming up with ideas. They're tweaking. It's a scientific move. So
It's a lifestyle play.
like
Will that lifestyle continue, to be a viable, increasingly paying market? And
well,
the
I
way
like the
this last few
sector.
weeks gone,
I like the sector. I like the uniqueness. I like all of that because I'm not as alkaline as I want to be during this doggone process. But I've been vegan for 3 years, man, and the Dr. Sebi, alkalinity. I'm big on that, but I avoided Beyond Meat like the plague because I wasn't trying to get soy and this and that. But that's a personal thing. I'm not looking at that from the standpoint of like, hey, people were jumping on this, and we saw it back here. And we look, guys, talked about the RSI in July. It ran Beyond Me is like it ran up there, and I was like, it's gonna sell off. I tried to short it there, but the options were so pricey. I was like, I can't afford it. And look at this gap. If we guys with technical analysis, it comes into play. The gap up occurred. Big gap up on the day of close on June 6, 2019, 99.50. Open that next day at 130. So wait a second. 99.50, 130, ran up like 30 handles and kept going. And it hit that peak and the sell-off came, but it didn't fall below, it didn't close that gap. So we say all gaps must be filled. Sold off, but it didn't fall that. It ran up to that peak, and that's the march down. And then we finally closed that gap around this time, right around.
Yeah, they voted down the stimulus bill.
Oh, it's gonna go even further down, man.
Yep.
Hey, y'all, look, if y'all trying to go long tomorrow, or
cancel it.
shoot. Let me look at Merck we'll do Disney and Merck. Disney is a long-term winner for me.
You can't go wrong
Yeah.
with even if Disney dropped, you can't go wrong with buying Disney right now. I'm not
Nope.
telling you to buy it, but at these prices,
80.
I mean,
I concur. Anything under 100 is a fair
yeah,
bottom bargain for Disney. Them parks going to open back up eventually, and
And
that's
they're still
going to be the
streaming.
biggest thing. And they're one of the biggest streamers too. So all they need
Okay.
to do is wait for the parks to get back open, and they're gonna be right back to it.
Let me put a price level of support and see if y'all with me on the short-term support. We back out.
I agree, Colin.
Right in this area, a little support level from back in 2013. Disney hadn't sniffed these levels at 67. Now, there's some support like right here as well. The 76.55 handle, 77 right there. It's breached that level. It's breached that level. It's 76, 77 level. There's some support there, and there's also support at 67.31 for me. I think there's value in Disney, but you gotta buy it with the idea of uh-oh.
yeah. This you're gonna have it for at least 3 years. Like it's
Okay,
not
perfect.
Yeah, you're not gonna sell this tomorrow. You got to be willing to part with this money for about 3 years, but this will definitely pay off in the long run.
Oh,
Okay,
man, drop to 67. Oh,
that Fuller, who's that?
That was Kylan.
that was Kylan. I didn't realize it dropped so far down. I haven't looked at it in a while. I saw it's $85. I'm like, shit, keep on falling. Sorry, guys, if you have Disney, but
no problem, man.
No, that's great.
I'm losing so big on Disney right now. Like that's my biggest loss in my portfolio. I bought Disney at 140.
Ooh,
Well, I mean, look,
gosh.
but Disney comes with the caveat. It comes with the Disney doesn't it have a dividend?
Yeah, it does.
But I mean, not like we got 50,000.
It ain't a huge one, but you know.
Yeah.
I mean, at least you got one. And I mean, it owns all those brands now. Like, this is bargain basement prices. Like, I'm sure the Marvel franchise by itself is probably worth $80 a share.
Right. Let's look at Merck. I'm gonna pull up Merck, and now pharmaceuticals for me, they're hot in this in this climate. I've never been a winner, but Merck is holding up above some levels that it's right at a support level right now at 67.39 for Merck. This has to be a long-term play. Hey, you're not going to, I think technology, I think biotech, I think you got to give it a market cycle though, because Merck could pull back and try to sniff down here and something could happen. It could have 2 drugs that don't meet approval and you get a sell off and it could find some type of internal contagion. But if you're going to ride those market cycles, because let's go with it. This has to
you have to be a fundamental trader to be successful at trading biotech and medical stock like that.
Yep.
You have to know what stages they in. You gotta really be on top of it. You can't you can't trade the charts with biotech.
No, and medical stocks and providers, just the economics of that industry, because it's a third party paying industry. Somebody else pays for the service that another person's. Just the economics of that industry is, yeah, they're right. You got to know what you're doing.
Let me see who asked that though for Merck. Trying to pull it. I missed. Okay, there it is. Celeste Anderson. Yeah, Celeste. For me, I think if it should hold, hopefully, but you never know. But there's support in this area in this price level, like the 66, and then you got a little bit more support a little bit further down. So there's a demand zone right here, a light demand zone where just, hey, we had a lot of price action right here, and it didn't fall below that. There's support below. So, but like I said, we could take a 20% haircut, but you have a lot of demand zone, like where people saw that price is attractive in these levels down to even 56. So losing $20 off Merck, it isn't, it's better than losing, 300 off of Boeing, and from a percentage stand, no offense, Boeing, but pay me this week. But that if you look in long term, run that market cycle out. I think Merck has been a market leader. One more quick thing for you on Merck. Do MRK, and this is just how we vet.
Mm-hmm. Yes, I'm sitting here going on to their page as well. Wanted to give.
You go to their homepage as well.
I go to a lot of stuff, but yeah, I'm right now just looking at their product overview on their homepage. I wanted to give, who was that, Celeste something, if you're looking at going into Merck Long because it's a healthcare stock and I believe pharmaceuticals, I was going to look at the products. What you want to do is keep an eye on their two best pharmacy products and how their sales are continuing to go, and what they have in the pipeline to be approved by the FDA. That's probably, if it has nothing to do with coronavirus, it's probably going to be pushed to the back for a while. But it looks like they make cancer medicine. They're one of the biggest, it says, oncology products and vaccines. Let's go through here. So just keeping an eye on their medicines is what you want to pay attention to. What's in the pipeline to be approved from the FDA, and what is their best selling, and how are they continuing to sell it. So as long as people still dying from cancer, then they'll be in business.
Yeah, but Merck is going to try to find that cure from that standpoint. And Sirius, well, Sirius XM. Did I spell that?
Keytruda. Yeah, I've heard of Keytruda.
Look at my screen.
So, yeah, so that's what
Okay, Sirius XM. What's the handle for Sirius? What's the ticker for Sirius?
Sirius XM SIRI.
Hey, thank you, sir. And Martrez, yeah, man, JD.com is a beast. It's Sirius. If we look at if we go off the ranking, it's some red in there, a lot of negative, but let's just go to the charts and look at some long-term view. It hadn't been out 20 years, but close to it. Sirius has been really, man, it's been in a straight trading range. Just not a lot of price action. It's currently right now dealing with what we're all going through, the sell-off. And it's not a buy for me, but you're a long-term holder of that particular company. So you have to, make your call on that. And is it 4? A lot of selling pressure right now, and it's sold now. I mean, the sellout, we have a day, a red day, green day, red day, flip-flop. It's some weird price action.
Keep taking out the green days.
Yeah.
With more volume. There's more volume on all of those red days compared to all of those green days.
We'll look at JD, and then we'll the REIT. The REITs, man. There are a couple of REITs that somebody liked, man. That was it. CCL, no, not Carnival. See it. Okay, here's JD.com. Let's go with the week. Let's go with that 3-year weekly. Okay. Now I talked about before finding that bottom, that base. Um, there's at the sell off, we're at the tops here, sold off, found a little support. And then we're like, when do I buy? When do I buy? When do I buy? That base is being made right in this period, but it needs to come out of there. And it finally broke out on that week of February 25th, 2019, little trading range. And this is right here. You have your accumulation or consolidation because everybody's getting the little shares. They stayed above the breakout level. So it's accumulation, the markup. So more accumulation. The markup phase to me is an accumulation also too. But people got all that accumulation right here. And then some little euphoria. People got excited. And we're kind of still in a trading range and it's fighting through. It's not even, most of the charts we're seeing red past support levels, recent support levels. So JD is it's going to battle. If you have, there is support and there is a chance for that pullback to find, reach right in there. But let's see that gap down. We closed that right in this little area at 3147. I mean, but you're at supply also. You have a supply zone, right? There's some shares, not heavy supply, but it's enough to where, we might stay in a trading range right here for the foreseeable future. But JD.com is always a name that I hear that's a popular choice. We'll do Caesars. I'm not a fan of Caesars right now, man. Just that watch that chart look nice to me. Oh my goodness. Thing about Caesars, everybody's dealing with the contagion. It's just kind of
interesting support level though.
Exactly. It's kind of this is 20 years now. It's below.
It's either gonna bounce from here
or
it's not. Or it's not. It's a line in the sand right there.
322.
They were the last ones to shut their casinos down. Caesars was the only ones open, and then they made them shut it down.
Man.
Now, I don't pay a lot of attention to Caesars, but I studied that entire casino sector, the gaming sector, and they kept saying that Caesar, they kept talking negative about the management, saying Caesars has been mismanaged for years. And like,
it's a fact.
Okay, and you're coming.
Yeah, I know a couple managers there or GMs there and shit. And yeah, it's a shit show.
That's the phrase my wife uses around, like, say, it's a real show, Jay. I'm like, okay, baby. So this particular sector is dealing with the one that shows strength in this sector. Okay, look at Caesars right now on this 20-year weekly. And we go with Las Vegas saying same. It's less contagion. Caesars is down here with their, relatively speaking, it's past all support levels. So if you're trying to go in that sector, you try to go best in class. Another weak one for me, Boyd, but Boyd, everybody's trying to find a little support in here and hoping that they can get that stimulus. But if they can't, man, look for the redness that's coming. I'm gonna go to and show you guys what I'm in right now. What APLS? Let's see. That's Yilin. Thanks for coming in, Yilin. APLS. Pharmaceuticals. Everybody loves a pharmaceutical. We had a push up right there. We had a sell off on the weekly, and they try to press the bears a little bit. We got the support level down here.
Go to the 1 minute chart if you don't mind. I think they pushed down, like I said, $18 now.
Let me go to. Let me go to.
It dropped after market.
18, yeah,
18,
yeah.
18, yeah.
Ooh.
So at 18 is let's go out to the 5-day, 15-minute, and all the handles are
Yeah.
coming down there. 18 is right there. So look for it if you're breaking, if it breaks past this a little bit, 1681, it may fall a little bit more, but hopefully you find some support. Base are right here, you know, if that 1733, maybe 1750 handle. But just tomorrow is not the day to evaluate something for a long. Or I just think tomorrow, I'm short, y'all. I keep saying it. I'm not saying like, oh, yeah, keep saying he's short. So what? CLDT, that's going to be the last one.
To the last one.
Exactly. Just say that. Until I do another one, huh?
Right.
Let's see. Hold on, man. I've been on
That's a red too. Yeah.
Chatham Lodging.
Uh-huh.
No support in this 20 years out, man. It's at historical
That's in
low.
no man's land.
Are you looking for a long term on CLDT or you own it right now? If you do, let's see if there's any news.
While you looking at news, I just think about the economics of REITs. They own real estate, so their income comes from people paying rent, basically, whether it's houses or whether it's commercial. So you know, you
True
got to
that.
think of any REIT,
Defaults.
right? In the next 3, 6, 9 months, are tenants going to be able to pay rent? That's the basic question you have to answer. If you think your company or your REIT you looking at, whatever type of real estate that they invest in, if their
Yeah.
tenants will be able to pay rent, then it should be a go.
So they pulled the dividend on the 18th, suspends the dividend for March. So that's a bearish play, bearish call. CEO Jeff Fisher, we believe it is appropriate at this time to withdraw our guidance. The 10th.
They
So
can't even guide.
they're saying it's going to be even more uncertainty.
Shit, the bid is $1 right now.
Oh, yeah. Yeah. Oh, you dropped
That's
it
a
down
wrap for that.
on them, Colin.
Yeah,
But
it's a wrap.
yeah, be careful with that if you're trying to go long. If you're in it, I don't know what to tell you on how to unravel it or whatever. Here's what I'm in right now, guys, for tomorrow. I'm an American short. I'm in a $12 put. Got in at 380. So we'll see how that goes. I'm an Activision short. I'm in a $55 put for Activision. I'm in two Boeing puts right now. I'm in a 93, March 27th, 93, $93 put, and then April 3rd, $98 put. I might even hold
That's
April
nice.
3rd.
Yeah.
I might be holding that a little longer. And I got, now, full disclosure, I got shaken out last week. My timing on Boeing, my direction was right. Now, this is another thing for technical traders. If you do options, y'all need to, everybody, if it's your first run, please just do long-term buy and hold while you study. Don't try to hop in and say, you know what, I'm gonna trade this market. I'm trying to, it's not for that first run. Because if you look, I tracked Boeing, and I was prepared for, this is called a shakeout right here. This is Friday. I got in on a short a little early, and normally I wait a little bit to find a nice base. But I said, I'm getting in, and I set my stop. My stop was actually up here, so I said, I'm gonna give it room to make a crazy run. By the time it got pulled up right here, past my entry, I was like, nah, I don't feel like taking this loss like that. So I tried to get out. Boeing moved so fast. I lost $889 on that one play.
I
And
lost that 2 racks on that
before you
one.
knew it, it tapped my spot and sold back off. And then it fell back below my initial entry. For my timing was horrible. Well, there's levels of pain in the market. And that was my level of pain, but I didn't want to deal with it. So I found another entry, got back in and got 2, because the chart told me this thing, the chart says sell off, but that's a long-term chart. We start drilling down further, and then you start seeing this is when you guys start trading. If you try to trade with an option on a day trade, the big candles, that's a piece of cake right here. Oh yeah, sell. Why don't you sell here? Why? You see these little wicks on the end right here? We go a little further in, and that's like, okay, you got that $1,000 in there. You said, I'm gonna buy a put, but you don't know the exact timing. You hadn't learned technical analysis. You say, man, oh, that's a big candle. It's definitely gonna go down. Goes a little further down. Buy in right here with that put. So this is a 3-minute chart. 941 hits. 942 hits. Good. Boom. 945. It runs up, and it got you. It got you. So before you know. But the thing about it, you have to be prepared for that. So that's why I'm saying we want to look at industries that might be that long-term hold for you if you're going to do it. And we talked about the discount retail sector with Dollar General. We talked about Disney. We talked about Microsoft, about Zoom. ZM is the ticker. Guys, I'm also short Hertz rental car. I'm short the rental car sector because this is what my wife and I talked about. Now listen, still thank you for staying for this whole time, guys. I appreciate it. My wife said the rental car sector is directly tied to the airline sector.
Yep. She's brilliant.
With everybody flies in, you got to get that car. I mean, it's a big portion of that rental car sector.
Yep.
That, and there's only 2 that fit my criteria, and that was Hertz, and let's go to the weekly. And it wasn't in just a bad shape, but it found weakness. And it broke through that 1413 was my support level. But then you have Avis, a sharper decline with a lot of volume, even worse, and actually, oh my goodness, that actually is another. I don't want to just short everybody, but brother might be getting in Avis tomorrow, depending on, yes.
Yep.
It's setting up for a bear flag.
2 sell candles right there. Yep.
Guys, if y'all
twin pins.
I'm making a call on Avis for me on car to the short
twin pins right there.
Guys, look. Then let's do an options play, and this isn't a buy, sell, or hold recommendation, but I'm going with it. Pull up the options chain on Thinkorswim. Let's close that down. And we look at all over here here's this options chain. These are the expiration dates. In parentheses, y'all getting the free game right here. Expiration dates 26. That's 26 days to expiration. So it's April 17th is when it expires. That's a Friday. That's 2020. 100 stands for, each contract we're going to look at represents 100 shares of the stock, the underlying stock. You can go out to 54 days, 152 days out, 299. I'm not doing that right now. I'm going to do 26 days because that's enough time for this move to occur. Now, left side, we have calls. Remember, we want calls. We want price to increase or value to gain value. Okay. Left side are puts. I'm looking at puts because I believe this stock price is going down. For me, I'm a delta trader. My minimum delta is 40. Usually I like to go up to 60. But now these prices are these are called premiums. The bid and the ask is the cost for the option. They call that the premium. You know, the premium is 250 by 390. Spreads are a little wide. I like my spread to be, if it was 250 or 250 by 275. You know, that would mean that it's easier to get in and out. Widespread means it's a little bit more volatile price action, but it should tighten up as we go. But honestly, the play that I would make, that spread isn't that wide right there. The $12 put at 40 delta, 102 volume, open interest of 32. These are all implied volatility is very high right now. I'd rather have 32 implied volatility, but if I get that move, the next thing I check, I always check the ATR, the average true range. For CAR is $3.47. So it's going to move enough within that time frame to make it to my particular price action that I'm hoping for, my price level. So we go back in here and I see, okay, boom. I'm gonna write down right now, guys. For Avis, I'm looking at April 17th. That's the date, expiration date, April 17th, 26 days out. The $12 strike. So the April 17th, $12 put on Avis car rental. I'm looking for the price to go down. It's currently trading at 330 by 410, which will change when the market opens. Options market opens probably a few minutes after the stock market. Okay, the delta's 40. You're writing your notes down. You're taking it in. I'd prefer to have more than 32 open interest. I'd rather have in the 100, 700, or thousands. But I'm probably going to run with this. You know, now we go back and see. I lost my boy. All right. Then we go back and look at the chart. If I enter in this particular stock right now, my entry, I'm looking at going short, probably below 1040. There's a gap that's going to be filled down to 975, give or take. Those are my targets. So I'm going 1040. This is just my preliminary 975 target. Then as I'll go a little bit further in depth with my studies. My stop could be right in this area at 13, but if I want to make it a tighter stop and say, you know, because I could go with that right there at that 1248, or even the open of the close was 1093. So I like to use where the breakouts happened at the top of the breakout. So 1250 is not that bad of a stop to where you can set it up and you know, but with options, if say you buy this contract, you buy the contract at we're at the $12 strike. You said we buy it at $4. I only want to risk 50 cents or $50. I don't want to lose anything else. I'd put an order in right here real quick. And I'm going to unmute everybody right after this. Let's say I'm in this Hertz rental car right now. I create a closing order. I could put a stop limit. We're currently trading on that at what is it? Trade 255. I could set my limit, or I could set it at $2. So if stock instead of going down, it runs up, and my option price declines, it'll trigger my sell order it at $2. It'll take me out, so will have only lost that $55 or $60. You don't have to lose your entire investment. You don't have to put your entire investment at risk. That's why you set your stops initially and you set your target. Here's the last thing, guys. I'm short Lyft also. April 3rd, $20 put. Let's see. And I love Lyft. Well, I don't love it. I like the technology. Hold on one sec, guys. I can get back over to Lyft. Sorry. I can't get out of here, man. All right. This is the part.
Oh, you know what happens with that sometimes. So just minimize your thinkorswim and then put it back. Mine does the same thing. Minimize it and then go back. It should be straight.
Let's see. I can. Here's what I do. Here we go. I'll hide the floating controls for right now. All right, and let's go to the charts real quick. We're looking at Lyft, LYFT. I'm at that $20. Now I'm out of the money right now. I got in. I wanted to get in once it fell below 2074. It fell below 2074, and it found some support, and found a little bit of support. But now I feel that we're gonna have a sell-off, and I'm gonna take my profit tomorrow. The chart has been bearish, but it's not super, just like amazingly bearish, but it is, try to find some support right there. A little buy, but I just think there's enough pressure and enough more overall market pressure that's going to cause a little bit of an issue. Now, what I did do, guys, last Friday when I took profit, I finished out my position that I wanted to build in space, Virgin Galactic. And that's a speculative play. It's a divisive situation. I made a nice little pretty penny on the warrants and different things.
You gonna sell?
No.
Sell? I mean, not sell but sell. Are you gonna sell calls on it, or?
Yeah, I'm gonna sell calls against it.
Okay, yeah. Gotcha. I might do the same thing.
That was my goal. Is like my son and I was like we were like, okay, we can secure enough shares to where we can sell calls against it if it pulls back, because this is a speculative long-term play. A lot of people, and I noticed that I liked it when a lot of people, I think I was in it at like 7, and then I bought back, I said $12 was my re-entry. If it ever pulled back to 12, I'm gonna get more shares. But that thing ran up, and that's where the overbought comes into play. RSI, that I shorted it. I bought puts to hedge my position, but also to take advantage of it. So this is a long-term investment, but I also traded it. You can trade around your core position. People don't have to say, "Oh, you're a trader." Yeah, okay, I trade. I'm trying to get I'm trying to get some short-term income. Period. Is during this process, because the buy and hold, people are down 50,000, 100,000 in their 401k. This is a historical anomaly, and it's a trader's market. So, guys, I'm going to unmute everybody. I want to thank.
I got one thing to go, or just one little twist. Go back to the options chain if you don't mind.
Okay. All right. Which one?
So it don't really matter.
Okay.
Personally, as JD is experienced and he will accept a 40 delta, I wouldn't advise anybody new to options taking anything less than a 60 delta,
60,
unless you trade in Amazon, because basically what that means is the stock price really has to move in your favor for you to only make $40. I mean, it's not worth risking, $500 to make 40.
Right.
And you get more benefits. So options unless you get really lucky, options doesn't reward people being cheap. So the
True that.
cheaper that you go, the more money that you're gonna
Gonna
lose.
lose. Yep.
So
Right.
yeah,
Well,
so you want to think about buying time, and you want to buy deeper in the money. So if you look at that
this is a good one right
22.5,
here.
right? Yeah, or even that one, 17.5, that's the difference in $20. So if he would have spent the extra $100, he would be making an extra $20 per dollar move, and he's losing less on time. So
True that.
the more money that you spend, generally, the more money you're gonna make, and the higher percentage that you're gonna be profitable.
Yep.
So
Good
being
call
cheap
on
in
that.
options is a way to lose a lot of money.
Lose.
And I'm 100% with you, dog. I appreciate you stepping in on that one. I a lot of times the ones that like Microsoft, there's some options that the pricing is really good. You know, it's a fair price.
Mhm.
And if we're undercapitalized, that's the problem that causes the issue. You know, if in most cases. Let me see if I can get my screen back up for y'all. Exit out.
All right, it's back.
Well, I'm trying to release everybody's from the mute.
Um,
Oh, so you go to participants,
you all.
and then just click unmute all.
I'm reading your comments, man. You lost your man Cartez.
I'm sorry, Cartel, man. See, this really wasn't going to be an options event. Yeah, let me minimize this. I'm trying to get the floating control screen back. Let's see. Hey, y'all, you got to help me. Get me to that. I get my control panel back.
So to the left of share.
It's not even up on my screen.
So yeah, so just scroll your mouse all the way down, and then it should pop up. Like, so if you scroll your mouse down, then the share button should pop up. Or you can go scroll it all the way to the top. It's either always going to be at the very top or the very bottom.
All right. Let me put it on here. See if we're here. There we go. Hey, thank you, man. Unmute everybody. Well, we might mute them back.
Yeah, so just do it like you can mute everybody, and then anybody who's not talking, just mute the mic.
I was gonna say that's what you started.
Hey, everyone, if you're not talking, mute your mic for me. So we can want to say something, unmute yourself.
Can you hear me?
Yeah. Go ahead and check in, man. I appreciate you coming in tonight. And we're just going to go ahead and wrap it up. And just want to, if you have any thoughts or questions or ideas, man.
I'm just super new, man. I'm super new. I'm trying to figure it out, but
Wait, is this Cartez?
Yep. Yep, it's Cortez.
Okay, man. Were you just going to take your time with how long were you here? Because there's going to be the areas where you can go to study just the investing side, like Investopedia.
Right, okay. Well, yep. I heard of that.
Okay, look at the screen. Let's see if I can minimize this. There's a little section, like let's say beginning.
Okay.
Even the education side, you go off. Just the idea is you're not going to try to go to one where it's costing to get this first.
Right, okay.
Let's see.
Like she just stumbled into me. Like, what are you doing?
No, she did, Alicia.
She get her little feelings hurt so easy.
I want to pay the investment. How to start investing in stocks, a beginner's guide, right here. And that's going to be the idea. You pop in there and read. You read, but then you can hop over to and talk.
The mic went off.
Can you hear me? Hello.
Okay, yeah, I hear you.
There you go.
Okay. But it's just going to take a little time, man. But you can go to YouTube and have you signed up with your trading with the trading platform yet?
Yeah, you know what? I jumped right in, man. I'm in Robinhood, and I done heard so much book.
Oh man, get
Robinhood.
out!
I know.
Get out!
I know, man. I'm already $450 in, man. I'm stuck for a minute.
Well, hey, it takes a second to unwind it too. But go. I mean, if you're gonna get into it, just do your studying. Not to trade right now until you. Because the whole idea, if you start trading right now, trading options or any.
Somebody was saying if I wanted to get into the Forex, I needed to go on Baby Pips.
That's where I started.
Free sign up with phone app.
Okay. Go ahead,
I never heard of it.
Stephen.
No, I never heard of it.
I ain't got off into him today because I've been doing mine, you know.
And who's speaking right now? Let me see who's talking. Who we have here?
I can't do.
Hey, son.
That's Alicia.
Okay.
What's gonna benefit me most is doing me. His is not gonna benefit me that much from what I see.
Which one?
Not right now. You know what I mean?
Can you hear me? Hello, can you hear me?
I don't know if she's talking to us or talking to.
No, she's talking to somebody.
Oh, okay.
I'm lost. I'm like, damn, I didn't even tell what I do in Forex. She already said it.
Yeah. Well, guys, let's see. I'm gonna close this down, man. If we don't, but this is a 3-hour run tonight. I appreciate y'all coming in.
You know what? I appreciate you though, man. I'll be tuning in every time.
Well, I tell you, I'm gonna leave my email on here. Let's see. Yeah. I should have given it earlier. Send me an email and I'll add y'all to the list.
Okay.
I do. It's hard to do it on Facebook and tag everybody. So I'm trying to do the
right.
Some kind of way to.
I just saw it.
Futures up. Let's see. Everything is off a little bit, but I'm trying to bounce back. It's down 747. Not down over 1,000, but it's gonna be a. We'll just see. I might watch this overnight, man. But y'all, hey. Oh, I'm recording this, Charlene, and you'll be able to watch it a second time. It'll take care of that, and then I'll post it in. Send me an email too. You see my email address, jd@yourmobiletrader.com, right above there, and I'll also try to send it via email, or I'll tag you guys. So, y'all, I'm gonna wrap it up. Thank you very much. Hey, Maurice, Steph, I appreciate you stepping in, man. Thank you.
We're meeting at 6 too, so in like an hour we doing this again.
You got your meeting again? Okay, cool.
Yeah.
Hey, it's all about. Look, if the more work we put in the prep phase and the study, the market is. I'm not gonna say it's an ATM, but it's a doggone ATM.
It's gonna do what it do.
Whether it's a long-term ATM for building value, or it's both, where we're looking to build income in the short term. So study up, guys. Everybody else, be safe out there, man. Because if you go everywhere and they say, "Oh, you just wash your hands," but then every time they show up at a station, the people in a full hazmat suit, it's something more to what's going on. Then, oh yeah, hey, Colin, we're not sleeping on the futures, dog. I want that money. Wait, I appreciate y'all coming, so I'm gonna go ahead and wrap it up.
All right, bro.
All right.
You know, I'm gonna be texting you shortly anyway, so.
Cool. Y'all email me if you need anything. All right, take care.
All
All
right.
right. Peace.
Sir.